All right, good morning, everybody. I'm a little bit early, huh? Wound up, ready to play. How's everyone doing today? We're already starting to get some people in here. Ace, good to see you back. Big O, nice to have you in here. Paul, K-Pops, nice to see ya. Good morning, Debbie. Good morning, Mike. Miss Sophia's here. Joel's hanging out. Gary's here. Man, all the cool kids hanging out. Alan, good to see you. Alex G. George, man, I tell you what. This is a good looking crew. Tell you what, I'm loving it. Good morning, guys. Happy Friday. And I'll tell you what, I want to start with this. Hopefully, John Novak's got his speakers up. Happy birthday, Nexgen. Guys, it was in 1997, August 4th. Good morning, Abdulaziz. That John Novak started this. He and Melinda we're living in Houston, and if I'm not mistaken, they borrowed some money from Mark Dean. A lot of you guys know Mark Dean, so that he could start creating this algorithm, creating this automated Fibonacci. And guys, it has been just forward progress ever since, and I'm so proud of him. So happy birthday to NextGen. Pretty amazing, guys. I'm excited to be a part of it. I'm proud to be a part of it, without a doubt. All right, so hopefully his speaker was on. If not, I will deny ever saying anything nice about my brother because he is my brother, after all, right? Guys, let's get to work. I'm excited today. If you were trading this morning, oh my gosh, NASDAQ just dropped, and then news hit, and it went gangbusters, and it was awesome. And if you were quick enough to be a part of it, you're probably done trading for the day. I shut down for the day already. I hit my goal plus a little bit and called it a day. Good morning, Luciano. Good morning, Ziba. I know, right? Happy birthday. It's quick, isn't it, Gary? Guys, you gotta know what you're looking for. You gotta have those rules 100%, or it becomes a little difficult for sure. So, guys, we're gonna do the first thing that I do every morning, and it's go to forexfactory.com/calendar, right? I put the link up in the room. If you were getting ready to enter a trade at 8:29 a.m., hey, good morning, Lady P. Dude, sleeping late's a good thing, Gary. You got to do that. I woke up early today. Guys, I never hit my alarm, and I've hit it the last 3 days in a row. I'm fighting some allergies out here in the desert. And this morning I was up at 3:45 a.m. and I was like, let's go. So excited all morning. And then I sat on my hands for 2 hours. Didn't have a rules met trade. And that happens sometimes, right? You got to be a little patient. You got to wait for the absolute best of the best. But I'm digressing here. It's Friday. I've had a little coffee. Guys, forexfactory.com. If you were watching the market at 8:29 and thought you saw the absolute perfect trade, got into it, and then news hit, and that market spiked and jumped and bumped and flew a couple different directions. It bounced off of Fibonacci resistance. It bounced off Fibonacci support. And it did all these different things, and it was moving so fast, it was untradeable. Gary, that is the best news that you could ever get on a Friday. Congratulations. That's wonderful. Anesthesia will mess with you for a few days. Man, that's good news. That makes me happier than NextGen's birthday, I think. So, guys, every morning I'm going to go and I'm going to look for high impact news. I'm going to look for medium impact news. Good morning, Jay Solar. And I'm going to make sure that I'm not trading directly into one of these news releases. And I got to tell you guys, I never worry about what the news is. I don't really worry. Yeah, Gary, I was going to talk to you about that after class. Not really. Hey, Levon, good to see you in here today. Man, I am so stoked to see all these people in here. Samuel, great to see you. All right, guys. So, watching for news, making sure that you're not trading into that emotional freight train, without a doubt. Hey, guys, I can't stress this enough. If the market's moving too fast to trade it, don't try to trade it, right? Let it relax. Sit on your hands, kick back for a minute, and just wait for things to get back to normal. It always does. But having this awareness, knowing when the news release is, not even worrying about what the news release is going to give you that little edge up, making sure that you're not trading into something silly. And then, guys, everything that I talk about today is coming from this education page. Anything and everything that you need to be successful with the software is found right here on one page. And this page is cloned over in Discord if you don't even want to go to the education page. But guys, this is where you're going to find the rules. This is where you're going to see exactly what you need to give you the advantages to put you in a position to make money day in and day out. And if you click this button to start the education, it brings you to the tutorial section. And the tutorial section, starting top to bottom, guys, anything and everything. It's going to talk very much about if you're new to Fibonacci. John Novak discusses the trading logic. This is kind of your introduction. Go take a look at it. It's pretty informative. And then we're going to get into the rules, right? And we're going to talk about management. We're going to talk about entries, proprietary trading firms, study time. Guys, remind me at the end of class today, we're going to go over market replay. We're going to talk about how to use it, how to set it up, how to get into it. And that's going to be your homework over the weekend, guys, is to go back and market replay and practice all these rules that we're talking about today, and just kind of reinforce that understanding. My first hour of class is the same first hour every day. And to be honest with you, it's turning into an hour and a half because you guys are asking such amazing questions. I don't want you to stop that. But we're going to talk about a high probability trend trade for this first hour, guys. We're going to focus on one trade. And this is a trade that typically wins more than it loses. This is a trade that typically wins up to 70 to 80% of the time when you follow the rules. And a high probability trend trade is going to be defined as when each indicator on every chart agrees with the rules for the trade. Guys, this is your warm, fuzzy feeling as you enter the market because you're going to have every advantage that you need in place to take a trade. There's going to be the strongest triggers, right? We're going to have momentum. There's going to be nothing between you and your target. Guys, this is the trade. If you're a brand new user, if you're on a demo, if you're in your first 30 days looking for success, this is the trade that just laser focusing on execution, on entries. It's going to set you up for success because this high probability trend trade is the trade that's going to teach you to read your charts. I'm trying to do something different every morning so it's not the completely same thing. So I'm rearranging things. Anyone that's day traded any amount of time will tell you that 90% of what you do during the day is going to be reading your charts. 90% of what you do during the day is going to be looking at your workspace, taking those indicators and discerning the information. And then when the advantages are present from your chart reading, 10% of what you do during the day is going to be taking trades, which means that you are not a day trader. You are a chart reader. You are a professional waiter. But your chart reading, when you take this foundational approach, when you focus on the high probability trend trade, when you give yourself the ability to read these charts, that's what opens the door to all those other trades that you see people posting in the room. That chart reading allows you to take those momentum trades down the line, and that chart reading allows you to manage those medium probability trades down the line, and it's going to set you up for success as you look for HVA trades or edge trades or whatever trades you think you need outside of the one that's been proven to win more than it loses. But chart reading is going to have you looking at your charts and understanding exactly where the market is likely to continue. And guys, this becomes your entry point. You'll be able to pinpoint where that market's likely to continue. You're going to wait for the market to get to you with a limit order, and you're going to enter the market at that point. You're also going to understand where the market is likely to go. You're going to use the basic rules from the high probability trend trade, being able to take Fibonacci and momentum indicators and have smart targets, have an idea of where that market is likely to go, and have a target just sitting there waiting for it, letting the momentum carry the market to it. And then most importantly, guys, you're going to understand where the market is likely to stop. And what we call these likely to stop areas are termination conditions, guys. And this is a giant brick wall between you and your profit target. And when we reach these termination conditions, it'll be that big red flag that says, hey, no more trades into this area, guys. It might reverse the market or it may create fluctuations that are untradeable because these likely to stop areas are the areas where those deep pockets guys, those institutional traders, those people with millions and millions of dollars that create the trend, that create the momentum, they are reacting to these Fibonacci areas. And you'll be able to recognize them before the market ever gets to them, and then you'll be able to understand with a simple formula how to identify them. So guys, simplicity is the battle cry for today. And we're going to use that simplicity, and you guys are going to become confident traders ASAP. And you're going to do that in two ways. The first thing you're going to do, guys, I can't stress this enough, is I need you posting in the room. I need you taking pictures and posting in the room. I want you to show me the trades that you take, especially the trades that don't work out. I want you to show me if you open up a chart and you're reading it and you're like, I'm a little confused right now. I want you to take that picture and I want you to post it in the room. I want you to say, hey, Mark, I need a little clarity here. Um, the feedback that you receive in class is how you're going to get to where you want to be, guys. You're brand new. Allow yourself to be new. Allow yourself to make all the mistakes that you can possibly make on simulator. But when you post in the room, you're going to get that feedback. You're going to understand the challenges that you're facing. You're going to understand the things that are going really well for you. And we're going to be able to identify patterns and keep you moving forward. And then the second part of that is being able to use the spreadsheet, guys. Going through, Nexgen provided you a spreadsheet. And if you go to your search bar, if you haven't found it yet, type in 90. If you type in 90 in your search bar, you should see the Nexgen 90-day training worksheet. And guys, this spreadsheet, whoops, it's on my wrong screen. This spreadsheet does two things for you. The first page is where you're going to track every trade that you take. Guys, this is a trade journal. Trade journals are not unique to Nexgen. Even the CME says every new trader should have a journal to track progress. This trade journal is going to talk about the conditions. It's going to allow you to leave notes. But the most important thing that you can do with this journal is come back and study it every morning. If you took trades yesterday, what worked, right? When you followed the rules, what worked? And if you didn't follow the rules, did that not work for you? Because you're going to be able to recognize these patterns. What felt easy? What kept you relaxed? What felt forced and what made you feel nervous, guys? These little reviews each morning are going to accelerate the learning curve because it's going to put you in the right frame of mind each and every day. So Ace J is asking or saying, I thought I had a high probability trend trade. So couple things, Ace J. This looks like an entry chart, right? Have we talked about the large chart yet? And did you go short or long? Which direction are you going? I'm trying to see. Market, I can't even, oh, there it is. We're at 45.20. So you went long. Which chart is this? Big chart or little chart? Looks like a large chart. Hey, good morning, PFI. That's your large chart. Where's your entry chart, man? Because your large chart looks perfect. Oh, here we go. I think I just found your entry chart, right? Cool. So guys, let's take this into the lesson for pictures. And Ace, we're going to come back to this one. Taking pictures, does everybody have TechSmith Capture? It was downloaded on your computer when you got your software. Everybody should have the ability to take a picture. Ace J, I'm going to show you how to make my life just a little bit easier. And this is purely selfish reasons. If posting trades in class is one of the most important things that you can do, the same way that Jay just did it here, knowing how to post pictures in class becomes so important too. So if we go to this live market and I click capture, Jay, the best thing you can do for yourself and for me, it's going to consolidate your moves a lot. With this TechSmith capture, when I push the big red button and hover over one chart, it's only going to give me one chart's worth of information, right? And that's not enough information. So what I need is your large chart, left click, and drag it all the way down to the bottom of the right. And what happens when I release is TechSmith capture is going to say, hey, Mark, do you want to capture an image? And I'm going to say, absolutely, TechSmith. And when I do it, Jay, now I have my entry chart, and now I have my large chart. I have the reason why I took the trade, and I have the actual trade itself. Guys, get in the habit of taking pictures of both charts, and then I want you to do this. I want you to write your rules. There's 3 rules. I want you to take 3 different boxes, and I want you to write your rules on the chart and tell me how you felt and what you were thinking. And Jay, we're going to come back and look at yours for sure. But giving me both charts, the reasons why, and then the entry is going to give us the easiest opportunity um, for feedback, just like that. So let's see. Large chart. It was over here, right? 718? Nope. Yep. No. I'll show you what I do for news, PFI. So Ace J, will you do me a favor? You got stopped out. Do you know why? You want a little indication of why that probably happened? Your large triggers are absolutely screaming up. Do you see it? Tons of momentum to the upside. See that support? All of your triggers are above it, right, Ace J? Which means that this area of support is likely to stop the market to the downside. And that's exactly what it did. So we're going to go through the rules, guys, and we're going to talk about how you can keep yourself out of these situations. Ace J, that's cool. I'm glad that you took the trade, right? And I'm very glad that you got stopped out of it because this isn't a rules met. You kind of forfeited a couple advantages here. And when we go through the rules, we'll talk about those advantages a little bit and the ones that weren't present. PFI, do you have your forexcat.com? Is that what you're looking at? I didn't even get the non-farm Forex Factory. Cool. So let me show you guys my filters. I'm going to look for high impact, medium impact, and low impact. Okay, I'm going to look at all 3. But PFI, the one thing that a lot of people don't do is they try to choose all of the Australia, Canada, China, Europe, Great Britain, Japan, right? Who cares? America. So I'm going to go America, USD. I'll go through all event types, and then when I apply my filter, it's going to will me down to the things that are important to me. And then I'm looking for those high and medium impacts. Does that make sense? I see a lot of people going, oh my gosh, watch this. There's so much news. Look at all that news. Holy smokes. Guys, we're Americans. We're very egocentric. Let's go just America, and that should get you squared away. So I don't see the non-farm employment change. Is that the one that you said? Non-farm payroll. Yeah. So that was high impact. Totally want to look at them. Medium impacts. Totally want to look at them. The only low impact that I'm really looking at ever is crude inventories, crude oil inventories. All right, guys, so take a picture. When you get this picture up, I want you to write your rules in on your chart. Always write your rules. Ace J, write your rules. Write your rules. I want you guys to have rules for everything that you do, and I want you to think about something. Your rules, the rules that I'm giving you this morning, have been proven and tested to win more than they lose. So if you get in the habit of writing your rules on the chart, what you're doing is you're reinforcing your ability to follow a plan that's been tested to win more than it loses. Once you take that picture, you're going to copy it. And when you copy it, you can just drop it right in the room like I did. And then, guys, the second hour revolves around me going through your charts, going through your questions, making sure that you get feedback on anything and everything that you do. And the next thing you can do is you can upload this picture, and it's going to take it and it's going to drop it into Screencast. Screencast is a cloud, and that cloud, I can take that address that it provides me, I can drop that address right into the room, and it's going to give me a link to that picture. Guys, this is how you and I have a conversation. But more importantly, if that was a trade that I just took, I can drop that link into my spreadsheet. I can put that on the page that I'm going to come back and study tomorrow. And I can set myself up for the day by thinking about what I did yesterday. So that is where are we at? That's the beginning path to getting to where you want to be, guys. I want you to post as many pictures as you can. I want you to ask as many questions as you can. You can't interrupt me. You can't disturb me. If it's not time for me to answer your question, I won't. If I ever miss your question, it's not on purpose. So make sure that you let me know if I do. Poor Debbie, I find myself missing one of her pictures every day. I don't mean to. It just happens sometimes. Our first hour is going to be focused on learning the trigger lines and the Fibonacci rules for when it's okay to trade, guys. You're going to have a very clear, a very concise set of rules, and they're going to get you set up for that high probability trend trade. They're going to give you something to focus on, and you're going to focus on entries. I want you to give me 30 days of entries, 30 days of getting in at the correct spot, and then begin to work on your management plan. You're going to simulate daily. I want you using the monopoly money, right? Some people are like, well, I can't learn if it's not real. That's cool. If you got money to burn, have fun. But there's no reason to lose money during an education process, guys. Simulate, post your pictures in class until you're sure you're taking the correct rules. Because when you're taking the correct rules, guys, the rules have been proven to win more than they lose, right? You don't want to practice the wrong trades. You don't want to build that muscle memory, hoping that you get lucky on your simulator and bragging to your friends, I'm a simulator millionaire. I've got a simulator girlfriend that loves me for my money, and a simulator Ferrari and a simulator mansion. But the reality is it's nothing. It's practice, guys. It's the driving range. You can't shoot a 68 at the driving range, but you can focus on the process that will get you to a 68 in golf in the real world. I want you guys to simplify. You don't have to, but I can tell you from experience, and new users, I want you to turn your volume up. The people in this room that simplify, the people that keep it basic, that keep it focused, that are studying rules and conditions and have the most basic plans are the people that I find are the most successful traders. The more you begin to chase, the more conditions that you begin to add to your simple plan, the more difficult it becomes to discern the information in the moment. Keep it simple. We're going to talk about a high probability trend trade. And then towards the second half of class, we're going to talk about a medium probability trend trade. But your high probability trend trade is your focus for the first 20 days. And then after class, you're going to be able to go through and set up market replay. You're going to be able to go back and retrade the day and fix your mistakes and take the trades that you skipped and skip the trades that you shouldn't have taken. And you're going to remind me today, guys, our last 20 minutes in class, I'm going to set up market replay for you. I'm going to do it on NinjaTrader 7. I'm going to do it on NinjaTrader 8. And I'm going to set you guys up so that you can go back and study and replay the weekend. Take pictures of the trades. If you do market replay this weekend, there's no reason why you can't bring me 10 pictures with 10 questions Monday morning, right? Keep me busy. And you're going to repeat this process every day until you always take the correct trades. And when you always take the correct trades, guys, you should be winning more than you're losing. And that's when you guarantee yourself that you can win. That's when it's time to go to one of those prop firms. That's when it's time to test your plan in a real world scenario. And that's going to be your path, guys. This is going to get you where you want to be. So let's focus on the high probability trend trade. Let's learn to read our charts. In simplicity, large charts and small chart. 2 charts, 3 rules, guys. That's what we're doing. A trade is nothing more than 3 advantages. A trade is the advantage of momentum. the advantage of a clear path, and the advantage of an entry area. Your rules provide these advantages. So if you focus on having the rules met each and every time you take a trade, you have momentum, a clear path, and an entry area as you get into the market. You're going to be able to follow these three rules on only two charts. Some of you are going to try to trade three charts or four charts or five charts. I'm telling you right now, guys, you can do exactly what you need to do on two charts. You're going to let a large chart lead the way. Large chart will define direction. Large chart will define momentum, and the large chart will define the areas. Guys, we're using one bar on a large chart to get all of this information. It's a broad stroke of a brush. It's a slower moving chart. This is the opinion of the market. This is what the people that control the market think the market should be doing. Your first two rules out of three happen on the large chart. By the time you turn your attention to a smaller chart, rules 1 and 2 will be met, and you will already have the advantage of momentum as well as a clear path, absolutely nothing in your way. When those happen, you're going to go to a small chart, a faster moving chart. It's a refinement chart, guys. And you're going to take that broad stroke of a brush, and what happens in one bar on that large chart is going to come through and happen at about 15 to 30 bars on this small chart, on this refinement chart. And guys, this really is one of the greatest things about Nexgen, is by using this smaller chart to look for an entry after the large chart says go, you're going to reduce your risk, you're going to be able to maximize your profit potential, and this is where rule number 3 happens, guys. Rule number 3 is going to get you into the market at that point where it's most likely to continue. So two charts, three rules. Is everybody cool with keeping it simple? I hope so. I can complicate it, but I sure don't want to. I want to focus on the absolute best of the best for you guys. I want to go to the user guide, and I want to click on the first rule, the T3 trigger lines. Guys, we're going to define trend, and we're going to define momentum with these trigger lines. And I'm going to show you exactly how we do it. The easiest lesson that you'll get today. If the background on your large chart is green, you're in an uptrend. You should only be looking for rules to be met for a high probability trend trade long. If the background on your large chart is red, you're in a downtrend. You should only be looking for rules to be met for high probability trend trade short. Guys, this is the easiest lesson that you're ever going to get, but I'm going to tell you right now, this is the best advantage that you can give yourself as you go into every trade. And I put the little question up there, how many mistakes would it eliminate if that was the only focus, is trading with the trend, guys? I can tell you that it would eliminate a lot. John Novak had a broker friend once. I love telling stories, guys. Friday's story day. I hope you're okay with that. And his broker said, hey, Mr. Novak, I can guarantee you $1 million in your trading account by the end of the year. And I only need you to do one thing. And of course, my brother was like, heck yeah, how do we do it? What do you think? And the broker said, I want you to fund that account with $2 to $3 million. And I want you to fight the trend every opportunity you get. By the end of the year, you should be down to $1 million. But bump, crash. Guys, but it's a true story. And it's a funny story. And it just kind of reminds you, even the guys that want you to take all these trades know that it's not advantageous to fight the trend. Rule number 1 says that we must have strong triggers. Strong triggers are defined in an uptrend when your small triggers and your large triggers are both wide and angled in the direction of the trend. When the small triggers break above the large triggers and create this space between the two, there's a gap between the small and the large. Guys, this is your strong triggers. This is when the odds are favorable for the market to continue in the direction of the trend. And you're going to hear odds favorable momentum all the time in class. Did you have odds favorable momentum? And if you did, if the smalls are separated from the large, guys, this is the perfect time, this is the most favorable time to buy a pullback to Fibonacci support on that smaller, faster chart. So strong triggers should always lead the way. In a downtrend, small triggers below the large triggers, both are wide, both are angled in the direction of the trend. It's the space between the two that lets me know that the odds are favorable for this market to continue down. And once again, when I have that odds favorable momentum, it is the best of the best look to sell Fibonacci resistance on that smaller, faster chart. These lines that come off of the price bars, these wicks, guys, that's that 15 to 30 bars on a smaller, faster chart. That's that small retracement to your perfect entry area. And you're going to see these on the large chart all the time. Strong triggers, there's a line, that's a potential entry. Strong triggers, there's that wick, that's a potential entry. I want you guys to commit to the trend and commit to the momentum, because momentum erases an awful lot of mistakes. Because when the small triggers, they can. Not because it does, Levon, because it has the potential to. When those small triggers work inside of the large trigger lines, we call this a weakening of the large triggers. It doesn't guarantee a reversal, but what it does is it lets you know with absolutely no question, Levon, that you've lost the advantage of momentum, right? And if it takes the advantage of momentum to begin looking for a trade, this is a great indication that it's time to sit on your hands for a second, because we no longer have those strong trigger lines. And you will see it precede a reversal in the market quite often. When we have these weak trigger lines, guys, you're going to hear me say in the room a lot, anything can happen triggers. It may go up, it may go down, and I want you to focus yourself from the point where the smalls break away until the smalls return. This is your window, guys. This is where we're looking for those opportunities. And what you're going to find is that those opportunities aren't present every second of every day. Remember that 90% of what we do is waiting for it to be present. And Levon, here's a great example. Strong triggers turned into those anything can happen triggers. And guys, this chart doesn't have the benefit of Fibonacci on it. And that precedes a reversal. The reversal creates odds favorable momentum. There's one of those tails. There's one of those potential entries, and look at how far it pushes the market. Market continues all the way up until we get that anything can happen trigger once again, precedes a reversal, creates odds favorable momentum, and there's one of those tails once again pushing the market down. And then you get these moments of indecision. I know a lot of you have trading experience, and I want you to ask yourself, man, how many times have I had my butt literally kicked in consolidation when I just couldn't figure out if the market was going up or down, when there was this huge fight between buyers and sellers, and I got on the wrong side of it 12 times? I've done it. Guys, your T3 trigger lines will let you know when that fight is happening, when the small don't agree with the large. When the small and the large don't agree with the trend, guys, that fight's going on. You'll see this happen in between Fibonacci areas. You'll see it happen when the market's trying to reverse. But what it does is it eliminates that rule number one. It doesn't give you that odds favorable momentum, which should just keep you sitting on your hands, waiting for the absolute best of the best. And if you sit on your hands and you wait just a little bit, you don't have to predict or hope or wish or want. Eventually, that market's going to work its way back to odds favorable momentum. So that's your rule number one, guys. This is the easiest one in the world. Odds favorable momentum, the separation between the small and the large, letting me know that the market's likely to continue in the direction of the trend right up until it hits. It's happening now on the S&P. We have odds favorable momentum. Whoops. Guys, this is what happens when you don't close your untitled workspace. And you know what? I don't even have the S&P up, so I'm going to open my S&P workspace. And I'll ask you guys in the classroom, is everybody good with this one, the triggers? Awesome. Is everybody comfortable with the idea of odds favorable momentum, that gap between the triggers giving you the advantage? Jose, you're not really familiar with it? Or it's not happening on the S&P? Not happening? I was going to say, you better be good with it by now. So Ace J, show me a picture. Mine's going to take just a second to calculate, or we'll go back to the S&P in just a second, and we'll take a look. But guys, this sets it up. This is the first rule. This gives you those strong triggers. This gives you the advantage of momentum. And then once you have that advantage of momentum, going to make sure that we have a clear path. Going to make sure that there's nothing between you and your target. Make sure that we haven't reached an area that may reverse the market. Guys, we call this a termination condition, an area that might stop the trend, that may create a bounce. These are the key areas where the market reacts. And that's going to take a second to load. My computer's chugging a little bit this morning. A termination condition is a Fibonacci-based indicator. It may reverse the market based on a comparison of the T3 trigger lines, the exact same trigger lines that give you momentum, and the area in question, guys. And these areas can be blue Fibonacci support, red Fibonacci resistance, can be yellow one-to-ones, a cyan divergence low line, or a magenta divergence high line. And these are large chart terminations, guys. These are areas that we're looking for on that biggest, slowest chart. And in order to identify whether or not a termination condition is reached, guys, it's going to be the easiest little recipe. Two things have to happen. Let's use this picture for an example. The first thing that needs to happen is price reaches an area. And when I say price reaches an area, it means, I'm going to take a picture of a picture. Guys, I love to speak through pictures. It means that these dynamic Renko bars, the trend is down, everything's down, and then price reaches Fibonacci support. The only thing you have to do when price reaches an area is just ask yourself out loud, where are my triggers? And if price reaches support and the trigger lines remain above, guys, you have what's called a termination condition. You have an area that may reverse the market. It may create a bounce that's untradeable. It may just smash right through. But the thing is once you hit that area and the trigger lines don't go through, you have given up the advantage of a clear path. This is where you have to just relax for a moment and wait and see how the market's going to react. One of two things are going to happen. The market's going to reverse and it's going to push in the opposite direction. Maybe the trend changes and it goes up, or the area is going to break and it's going to provide you that clear path again. And this shows it perfectly. Price reaches support up here where my cursor is. Small and large triggers remain above the area of support. In the moment, you're going to sit, you're going to wait, you're going to see what happens. Ultimately, both my small triggers and my large triggers get to the other side of support. This is when we consider an area broken, and this is when that path becomes clear. This is when we have that advantage of rule number 2. And you'll notice that support behaves as resistance. And there's that odds favorable momentum. And there's one of those tails. And it pulls right back to that area of resistance with all that momentum, and it continues down to the next key Fibonacci area. Next-gen users, you are going to get your opportunities in between those Fibonacci areas when the path is clear, when the momentum is its absolute strongest. This next termination condition is a pivot stop out, and you're going to hear that a lot. There's a pivot stop out happening, guys. In order to have a pivot stop out, first, you must have a pivot. And a pivot means that the market went from up to down or down to up, right? So the market goes down and the market goes up. This cyan line prints right about the third bar. And this cyan line is what we call divergence. And divergence means that there was a loss of momentum. Momentum is not following price. Price doesn't reach this area, price creates this area. So it's not a termination condition, but when price returns to that divergence low, you ask yourself, where are my trigger lines? And if your trigger lines remain above that area of support, well, now that's a termination condition. Now that's an area that may create a reversal, that may create a bounce. And in this case, this termination condition, this pivot stop out of a prior divergence, creates a full reversal. It ultimately gives you odds favorable momentum and a clear path. Guys, this is what we call a strong bottom. This is what we call a good bottom. And a strong bottom or a good bottom, guys, this is the precursor for the highest probability trend trade that you can take. When you take a high probability trend trade after a termination condition on your large chart, those are the ones that typically win 70 to 80% of the time. And this pivot stop out is a strong indication that the market may reverse, but it becomes even stronger if it coincides with Fibonacci. You should get in around 52.25. Are you talking about the last picture, Levon? So, Levon, I like that you're with the trend. I like that you're with the momentum, and I like that you have a clear path. But on just a large chart, I don't know where I should get in. And I know that sounds silly, but only looking at my large chart, I'm only sure that I have momentum and I'm only sure that I have a clear path. It's going to take that small chart to figure out where our entry could have been if there was an opportunity. Does that make sense? I love it though, because that's a beautiful look. You nailed it, 100%. Same thing from the tops, guys. 90% of what you do during the day is reading your indicators. 90% of what you do in the day is waiting for advantages. Market trades up all the way to resistance. Ask myself, where are my trigger lines? They all remain below resistance. What that means to me, as a rules-based user, it's someone that insists on the advantage of a clear path. It means that I've got no more long trades, right? Doesn't mean a short trade. It just means no more long trades. From there, the market pushes all the way down to support. The sellers take over, they give it a good shove. And when we get to support, dag nabbit, no triggers break through. Guys, I'm not going short into that blue line because it may stop the market. It may reverse the market. It may create an untradeable bounce. Price pushes all the way back up to resistance again. There's that divergence high. It tests it. The triggers remain below. There's that resistance. Triggers remain below. There's a second resistance. Triggers remain below. Guys, there's no way I'm going long here. Financial suicide to trade into that area. But check this out. I get that full reversal. Large triggers go from green to red. I get a separation of the triggers. And man, I get one of those little tails. That high probability trend trade that happens after a termination condition, guys. This is your 70 to 80% winner. This is your absolute best of the best. So, Levon, do you see how there was that little tail, that potential retracement on a smaller, faster chart? And we never saw that little retracement over here on this one. Nope. So, Levon, you're not getting in on tails. We're going to use these tails as a study tool, Levon. So right now, all we're talking about is the large chart. All we're talking about is momentum and a clear path. I've got a couple more pictures. Price reaches support. Support holds. Triggers remain above. Oh yeah, we're going to piece it all together. And I'll put the two charts together as well so you can see exactly what I'm talking about. When price reaches these one-to-ones, discuss later. My brother. We know that there's no more short trades, guys. We know that there's not a clear path to the downside. And look at the bounce that it creates. So, Levon, when this termination condition creates a full reversal in the market, that's what we're going to call a strong bottom. And then when both the small and the large triggers get above resistance and it behaves as support, now we have a clear path. Rules 1 and 2 are met. And there's one of those tails, right? There's that potential pullback on a smaller, faster chart. That's your highest probability trend trade, guys. And we're going to look at the entry in just a second. But first, I want to talk about this phenomenon when the market reverses from nowhere. It doesn't reach an area. Everything says down and the market turns. Everything says up and the market turns. Guys, there is one termination condition that I'll look for on a smaller, faster chart. There's only one termination condition that I'll look for in a smaller, faster chart. And that is 3 divergences in the same price range. It may terminate the trend. 3 losses of momentum in the same price range may terminate the trend. 3 printings of those cyans at a low, 3 printings of those magentas at a high, it may reverse the market, right? So this is my indication. No more short trades, no more long trades. It becomes even more powerful when those small triggers work their way inside of the large. When I go from odds favorable on my small chart to anything can happen, I can visually see that the momentum is decreasing again. And then it's more powerful still when that final pivot, when that third pivot is higher than the previous from a low or lower than the previous from a high, it gives us one of those head and shoulder patterns that you technical guys understand so well. But you're going to see this at a low and you're going to see this at a high on your smaller, faster chart when your slower broad stroke of a brush is changing, but you can't see it because it is that slower chart. So guys, we're going to use areas on the large chart. We're going to look for 3 divergences on the small chart. And let's go to the S&P. And I want you to see, this is a great example. Weak triggers at resistance. Guys, it doesn't mean that the market's going to stop going, but look at how much of a bounce it created. This is going to take most traders out of the market, right? So we're waiting for it to clear. Price comes directly from Fibonacci support. There is your termination condition that creates a full reversal. There's those strong triggers in one of those tails. Look at how support holds. Look at how that bottom holds. Look at how that top holds. Guys, you can scroll back. Someone told me that they were going to go through and they were going to take pictures of termination conditions. You see Fibonacci hold darn near to the tick all day. Look at all of these instances. One of those pivot stop outs, straight to support, right to resistance with no triggers through, right back to support, and then it reverses the market all the way up to the next key area. We're going to look for our opportunities in between these areas, guys. We're going to look for our highest chance of success when the path is clear and the advantages are present. And so far, our large chart's given us momentum and our large chart's given us a clear path. So, Levon, here comes the magic, my friend. We're going to go to that smaller, faster chart, and we're going to figure out how to enter the market where it's most likely to continue. And we're going to do that with a pretty simple process. When the rules are met on the large chart, this is the look on your small chart, guys. You should have strong triggers on your small chart, meaning that the small should be outside of the large. That advantage of momentum isn't unique to the large chart. That advantage of momentum carries over to the small chart as well. Our rule number 3 says that we're going to use a limit order to buy or sell a pullback, a tiny retracement in price. Those are those tails on the large chart. We're going to buy or sell that pullback at an area inside of favorable large triggers. Every high probability trend trade comes from a line. Those lines can be Fibonacci support or resistance, they can be mid bands, they can be one-to-ones, but we are going to, in an uptrend, buy the market as it comes down to us, right at that area inside of favorable large triggers. And favorable large triggers mean that they're wide, that they're overlapping, that they are one on top of the other, strong in the direction of the trend. Well, we have to be able to identify that area. We have to be able to find what we call the window of opportunity. So when everything says up and I've made the decision because my rules are met on the large chart, I'm turning my attention to fibs, mid bands, and yellow one-to-ones that are going to fall inside of those large triggers if the market comes back to me. And then I'm going to wait for a pullback. I'm going to let the small crowd fight the large crowd. Large crowd says up. Large crowd says a clear path, guys. The powers that be say this market wants to move in the direction of the trend. Who am I to fight it? But there's going to be these yahoos, these guys that love to fight trend, these guys that love to fight momentum, these guys that I guess hate money, and they're going to give us a tiny little pushback. And this tiny little pushback, Levon, is that tail on the large chart. So we don't have to trade the tails. We're going to wait for a retracement to an area inside of those favorable large triggers. And when this reversal bar happens, you're going to create a window of opportunity. For a long trade, it's from the highest point of support to the lowest point of support inside of favorable large triggers, guys. And you're going to activate a limit order right at the top of that window. And one of two things are going to happen. Either the market's going to come back to you and it's going to reach that limit order, and your limit order is right there at 79.21, right at that highest point of support inside of favorable large triggers. And guys, this is your entry on the high probability trend trade. This is getting in where the market is likely to continue because of the advantage of momentum, because of the advantage of a clear path, and because of the advantage of being able to recognize that window where the market is most likely to continue. You can use these shapes to identify your window, guys, from the highest point of the triggers to the lowest point of the triggers. And this becomes the area that you're going to focus your attention, that you're going to look for those areas inside of favorable large triggers. Let me make my fill. We'll do it yellow. But we're going from the highest point of support to the lowest point of support. And this becomes the area where the market is most likely to continue, where it's likely to use those Fibonacci areas for a bounce to continue in the trend with momentum in the clear path. Is everybody, give me a Y in the room if you're with me. We're going to look inside of the triggers, but we're going to trade from the areas that fall within. This is where the market is most likely to continue. In every high probability trend trade that you take, you're taking as the market comes down to you, rather than waiting for the market to go in the direction of the trend. So we're going to enter at 79.21, but you have to understand that this is a window, and it may go to the bottom of the window, and that's okay, guys. Almost every trade that you take, you're going to see it go against you a couple ticks, a few ticks, maybe a point. It's just part of the process. But what we do know is that if the market extends beyond, if it goes beyond that window of opportunity, we don't want to be in the trade anymore, right? We're going to manage our risk before we ever manage our profit. If it extends beyond the window, we're going to have a stop waiting for it. We're going to exit that trade. We're going to take a loser. Losers are a natural part of a positive equity curve, guys, and anything that wins 70 to 80% of the time has got to lose 20 to 30% of the time. Every 10 trades you take, you have to be mentally and financially prepared to lose 2 or 3 of them. If it hits the stop, no worries. We're going to dust off, and we're going to wait for those advantages to be present again. But the reality is that if you're following the rules, 70 to 80% of the time, guys, this can be your result. Profit target reached. Because you wait for the pullback to the areas, your risk is minimized. Because you wait for the pullback to the area, your profit is maximized, right? If we jump in up here, I've got 2 points to that red fib. If I wait for the pullback, now I've got 6. Once the market moves in the direction of your trade, you can reduce risk below the reversal bar. And guys, this is your focus. For the first 30 days, I want you to focus on high probability trend trades. I want you to focus on your entry, getting in at the correct spot, because getting in at the correct spot creates manageable trades. It creates lower risk scenarios. It creates more opportunity for profit. So Levon, if I circle a tail, and let's do it after the fact. Let's go to the live market and let's see if we can find an instance where I had odds favorable momentum and I had a tail. And let's do this. Let's only look for odds favorable momentum because we want to talk about entries here. Whoops, that was the wrong one. I wish I hadn't done that. There we go. I'm going to take everything off of this chart except the advantage of momentum. And we're going to look at these tails. And I'm going to find a good example of one. The S&P hasn't been moving quite as much. Let's go right here. I believe this is yesterday afternoon. I circle a tail with odds favorable momentum with a clear path. Let me get a little squeeze on this and push it back. On my smaller, faster chart, I can scroll back until I see that tail. And there it is right there. So Levon, this becomes your study. If I circle the tail on my large chart, this is for everybody. Do this historically this weekend. I want you to go back and I want you to circle tails with odds favorable momentum. If I circle a tail on my large chart, if the momentum is strong, if the path is clear, and it pulls back to an area of resistance inside of favorable large triggers, I know that I have a high probability trend trade. I know that the rules are met for that best of the best. And if I circle a tail on my large chart over here, it comes directly back to that area of support inside of favorable large triggers. So what we're doing, Levon, if we wait for this tail, the market's long gone, it's already back up here. But now you can use that momentum, you can use that clear path, and with a little bit of study and a little bit of repetition, creating that recognition, you'll be able to find this entry. So let's do this one together. Let's get rid of our cheater circle real quick. And I want you to see what it looks like in a live market. Everything says up. The momentum is its strongest. The path is clear. Everything says go. And we're looking for an entry, guys. And that smaller chart is moving up. And it keeps moving up. And new users are like, it's going without me. And it keeps moving up. And you're like, egads and little fishes, what am I going to do? But you know that it's time to take a trade. You know that the rules are met on the large chart, and all you need is an entry. So we're waiting for a reversal bar. The reversal bar prints on the smaller, faster chart, guys. And the first thing you're going to do is you're going to turn your attention to those favorable large triggers, one on top of the other. And you can draw a mental box. You can use your drawing tool to draw a box. And I'm going to look from the top of these triggers to the bottom of these triggers. What areas are inside? My highest point of support are these yellow 1-to-1s. My lowest point of support is this Fibonacci support. Guys, we have identified where the market is likely to continue. Give me a Y if you're with me, especially new users. This happens in the moment. We have a window of opportunity. Levon, you're not good with it? If you're not, let's go back again. I don't know if that in was a little late, and it's okay, guys. So it's not the trigger inside of the large. So Levon, and this is why language is so important. It's the area inside of large triggers. So what does that mean? These are my large, I'm going to get this out of the way, and I'm going to use a circle. These are my large triggers. They're one on top of the other. They're trending. So the white circle, Levon, I'm going to just, I know that my areas need to be somewhere below the top of the triggers. And I know that my areas need to be somewhere above the bottom of the triggers. But areas can be fibs, midbands, or 1-to-1s. We trade from lines. It can be this green midband, it can be these yellow 1-to-1s, or it can be this blue Fibonacci support. So what we're doing is this circle tells me where to look, but these areas will define my window of opportunity from the highest point of support inside of favorable large triggers to the lowest point of support inside of favorable large triggers. Does that clear it up a little bit? The triggers tell you where to look. The triggers tell you to look for areas inside of them a bit. And remember, Levon, that it's going to be a lot of practice. I know that this is your first week. You are definitely not expected to grasp this 100%. Guys, nobody will in the first few days, and it takes practice. But watch this, Levon. Here's our reversal bar. Nexgen users will put a limit order right there. That's what this, let's make it white so it doesn't clash with anything. This is my limit order. This is where, right at the top of the window, right above that support inside of favorable large triggers, this is the potential high point for a bounce to go with the momentum, to go with the direction. Another bar prints that's coming closer. Another bar prints, another bar prints. And you can see how price pulls back right to those one-to-ones, right to the top of the window. Levon, you are now in a long trade. You have the advantage of momentum. You have the advantage of a clear path. And now you have the advantage of entering at the area inside of favorable large triggers. Your initial stop, guys, whoops, wrong one. The initial stop is going to go down here, outside of those favorable large triggers, outside and below those areas that are inside. This is where the market shouldn't go. And in this case, it's about 2.5 points on the S&P, which is about 12 ticks. The market comes down, and it's still inside of that window. We still have momentum. Absolutely, Levon. Only at the area inside of favorable large triggers. Use the language, area inside of favorable large triggers. We're still in the window. We're still in the window. I'm not panicking because I'm still at that area where the market's likely to bounce. And then I get a reversal bar. So let's clear the picture a little bit. Guys, we had odds favorable momentum. We had no termination conditions. We waited for the reversal bar, and we entered the market at the highest point of support inside of favorable large triggers. Is everybody comfortable? This is your entry, guys. Once that market begins to move in the direction of the trade, watch how your risk goes from 12 ticks. We are approximately 4 ticks of risk on this long trade. And Levon, here's the tail. You ready? If I click forward 1 bar, that tail was this pullback. So we can anticipate where the bottom of a tail is going to be based on the areas inside of favorable large triggers. This is your recipe, guys. This is your path to success. Your job is to go back and circle those tails, to study, to begin the recognition process. Take care, Luciano. And then watch this. Luciano, if I circle this tail, there it is, right at support inside of favorable large triggers. So now my job is to take this picture. I've gone back, I've circled the tails. It lines up with support inside of favorable large triggers. And this is what I want you guys to do this weekend. I want you to go back 10 days on the S&P or on crude oil. And I want you to write odds favorable momentum in 1 box. And I want you to take an arrow and I want you to point out where that odds favorable momentum is happening. Then I want you to write your second rule, right? No terms, clear path. Because you're identifying the looks with the rules. The top of that bar hasn't reached an area, therefore the path is clear. And then Levon, this is going to be the key. And guys, this is for all of you guys that are brand new. This is where the language becomes so very important. I want you to write it out. Pull back to an area inside of favorable large triggers. Seems like a lot to write, doesn't it? But doesn't it reinforce exactly what you're looking for? Guys, everybody can look at this chart. You can come back and study this chart, and you can say in order to enter a trade, these are the conditions. I'll put a little go button right there too. I must have odds favorable momentum, and this is exactly what it looks like. I must have a clear path, no termination conditions, and this is exactly what it looks like. And I must have a pullback to an area inside of favorable large triggers, and this is exactly what it looks like, guys. And I'm going to share this to that screencast. I'm going to put this picture in the cloud, and I'm going to go to my spreadsheet, and you're going to go to your spreadsheet. And you're going to go to that green section that says my favorite looks, right? My personal trade setup looks. And you're going to right click and you're going to drop that link in there and you're going to create a hyperlink. You're going to paste the address and right here under text to display, you're going to call it perfect trend trade long. And now you have something to study. And guys, this is your first 20 days, recognizing entries, practicing entries, and not worrying about anything other than getting in at the absolute best of the best spot because it's going to reduce your risk. It's going to maximize your profit potential. So for you guys this weekend, here's a copy of my spreadsheet. This is over 250 pictures of rules-based entries. I would encourage you to click on them, to study them. And Levon, check this out. If I click on, we'll pick somebody's, one of our users. No, I don't know. I'm looking for a long right here. Here's Alyssa's perfect high probability trend trade long. And Alyssa got rid of her screencast. So there may be a dead link in there. How about Alan's perfect long? Alan's perfect long has strong triggers. It has no termination conditions. And it has a pullback to support right inside of favorable large triggers. And it, guys, if you go through, you're going to create recognition through repetition. You're going to be able to study this. The next thing I'm going to give you is a set of rules that you can print out and put on your desk, making sure that you're following the rules for that high probability trend trade, making sure that you have a good top or bottom, a termination condition that creates a full reversal, and there's a link to a video. Guys, this is an awesome video that you're going to find helpful to get you recognizing those good tops and bottoms. You're going to make sure that you have odds favorable momentum both on your small chart and your large chart. You're going to make sure that no termination conditions are present. And you're going to be able to look at the language, area inside of favorable large triggers. If you can mark yes to each of these, I've never had anybody in the history of this checklist do worse than 70% winners, guys. But you have to study it so that you can recognize these looks in the moment. Take this checklist and print it out. I'm going to give you another one that is the exact same checklist, but the difference is I stole pictures right from the education material. Is the market coming from a good top or bottom? Well, there it is. That's what it looks like visually. Did I have strong triggers? That's exactly what it looks like, and that's what it doesn't look like. No termination conditions, we've put the recipe. And that window of opportunity, and Levon, this one may be helpful to you because when you look at these pictures, let's see if I can bump this up a little bit. It shows you the reversal bar that starts the pullback. It shows you from the top of the triggers to the bottom of the triggers and the lines that fall within. And it also reminds you that the areas outside of those large triggers are not a part of the window. And you have that for both short and long trades. So guys, I put both checklists in the room for you. I put a copy of my spreadsheet in the room for you. The only thing you need to do now is start studying, repetition. Take those pictures, get them in the room so that you can take a market that appears to be moving fast and it's going to slow it down because you're going to have that recognition. Odds favorable, everything says down, circle a tail. What did it look like, guys? This is happening live. What do we think about a pullback to an area of resistance inside of favorable large triggers? Give me a Y if you see it. What a great study tool. I can see the momentum. I can see the clear path. I can see the pullback to an area inside of favorable large triggers. Guys, this is your highest probability trend trade. This is the trade that typically wins 70 to 80% of the time. This is the trade that's going to teach you how to enter the market. This is the trade that's going to give you all of those advantages that you look for each and every time you take a trade. And I want this to be your first 30 days, guys. Focusing on that high probability trend trade that happens after a termination condition is going to teach you to read your charts. You're going to understand where the market is likely to continue, and that's where you're going to enter. You're going to understand where the market is likely to go. Remember, Fibonacci lines off in the distance when that large chart has momentum, those are targets. And you're going to understand where the market is likely to stop. You can come through and you can recognize all of these key elements. I'm not missing you today, Debbie. And when you have them all together, you'll be able to take these trades. And this embracing simplicity. Embracing the idea that three advantages get you into the market. Embracing the idea that the only scenarios in your life are rules met or not rules met is going to put you on the path to success, guys. It's going to get you exactly where you want to be. And it just takes repetition. So with that being said, there's our first hour. Guys, at the end of the first hour, I'm going to go refill my water. I'm going to take an Allegra. And you guys post pictures, post questions, right? When we get into the second half, we're going to start looking at your pictures, guys. We're going to start looking at what you're doing. Gosh, that's pretty. And we're going to answer any questions that you have. I'm going to answer any questions that you have. Because remember, my job is to teach you the rules, to teach you to read the chart. Your job is to keep me busy with questions and pictures. I'll be back in about 5 minutes, guys. All right, ladies and gentlemen, let's get into that second hour. What do we see right now on the S&P? So we had weak triggers, right? Hanging out at a fib. We knew that we didn't have the advantage of momentum. So we said to ourselves, you know what? Rule number one's not met. I'm going to sit on my hands. If you didn't believe it completely, you also had a loss of momentum in the form of divergence, right? Just kind of confirming, hey, things are slowing down. You also had those anything can happen triggers. Guys, rule number one, without a doubt, was not met. If you made the decision to enter at the area inside of favorable large triggers, well, then you didn't let the large chart lead the way, right? You didn't give yourself that momentum, and that one certainly didn't work out. And the market pushed all the way back up, straight to resistance. And when it reached resistance, all of the trigger lines remained below, and the market pulled all the way back to those large triggers. And if you tried to go long at a mid-band that wasn't inside of favorable large triggers, well, then you got run over there too, right? So guys, rules, one of the things that I'm trying to stress with this little scenario is that rules are going to keep you safe. Rules are going to keep you out of those maybe trades. And one thing that I've found to be true is that sometimes it's not the money that you make with those rules-based trades that's so important. Sometimes it's the money that you don't lose by breaking your rules that allows that P&L to be where you need it to be. So I'm going to scroll up to the very top, and I'm going to start looking at the charts that you guys posted. Gary started last night around 8:50, and I wanted to go ahead and start there because obviously I wasn't here at 8:50 p.m. last night. And Gary starts off with a termination condition that creates a full reversal. And that full reversal provides him odds favorable momentum. And that odds favorable momentum gives him areas with the potential to break. And sure enough, he takes an entry right at support, right inside of favorable large triggers. And it becomes an easy win trading with the trend, trading with direction, trading with momentum. Gary, absolutely outstanding. There's the same picture. The trade's so nice, he posts it twice. And then the same concept. Odds favorable. Everything says up. He takes the perfect entry. But guys, do you notice something here? Is this area is not inside of those favorable large triggers. This area falls outside of those favorable large triggers. Rule number three, not quite met there. And I know it seems silly, that little discrepancy, but that little discrepancy can be enough to be a game changer for you. Joel, everything says down, everything is cranking. There is the perfect entry and able to take profits. And I like this. Joel, I hope you're in the classroom and you hear this. Guys, 2 divergences doesn't scare me on a small chart. 3 divergences in the same location might be a game changer. 2 divergences means that they're just trying to make decisions, but the large chart still leads the way. John Novak says, when everything says down, when the path is clear, he'll take a momentum style trade. Doesn't really fit those high probability trend trade rules, but it's still an amazing chart read. When price breaks Fibonacci support, both triggers go through, it begins to act as resistance. Notice that he was patient until the triggers broke, and then once it breaks through, he grabs the opportunity for that support to become resistance, taking it all the way down to those next Fibonacci areas. Strong work, John Novak. Happy birthday, Nexgen. All right, I'm going to scroll back up. We're going to take a look. Guys, I just want to remind you that I scroll from the top to the bottom, from the top to the bottom. So I'm looking at these pictures, and then I have to scroll all the way back down to look at any questions that may be there. Jay Solar showing us a little something today. Let's see what you got. Jay Solar, there's your first one, but there's no areas inside of favorable large triggers. And because there's no areas in there, you're just not sure where it's going to bounce. And then the market comes down and the strong triggers break through and there's a little bit of divergence in there. And I see that you put a positive there, Jay. Did you take a trade? Or are you just kind of mapping it out? Just studying, cool. So on this one, I like it. You nailed it. No areas, right? So you don't have any idea. Where's it going to come from? And then here as we get down, Jay Solar says this is a 50-50 trade. So I guess we should talk about 50-50 trades as we come into our chart reading coming through. Guys, 50-50 trades. This is for all of you new users. This will be your second trade that you take. And the most important thing that I can say is that 50-50 is not in any way a reflection of your odds of success. A 50-50 simply refers to the fact that 50% of your trigger lines have broken through an area and 50% of your trigger lines are not. So if we go through those rules for terminations, we know that if price reaches an area and no trigger lines break through, that clear path isn't present. And then when the smalls and the large break through that area, now we have the clear path. And David B., let's use your picture as a follow-up as well. Perfect. Price reaches the area, no trigger lines. When all of the trigger lines get below, the area is considered broken, David. And that area of support begins to act as resistance. Same thing here, that area of support. Your smalls are through, David, but your large are not. Do you see it? So while 45.41 is broken, 45.38 hasn't had those large triggers make their way all the way through yet, so it remains a 50-50 trade. So when we talk about it, if the small are through and the large haven't made it, it's going to be 50-50. If both the small and the large break through, the path is clear. Could it be one small trigger line and one large? Just one line of the triggers, Jay Solar? So for example, in David's picture, one line of the large is through, but one line is not? Respectfully, no. Guys, an area is considered broken, and that's a great question, right? And that's our brains telling us, well, I don't want to wait. So Jay Solar, when the large are below and the smalls are above 50-50, and until the large, both lines of each trigger line get through, it's not considered broken. And on that same token, if only one line of the small triggers are through, guys, that area hasn't even turned into a 50-50 yet. So new users, does that make sense to you? 50-50 has nothing to do with your chances of winning. 50-50 has only everything to do with the small triggers are through and the large triggers are not. It means that this area has the potential to break, but it hasn't yet broken. You don't have a clear path. It's impossible to call it a high probability trend trade if rule number 2 isn't met, guys. And this is going to be your first medium probability trade that you work into your trading. And a medium probability trade means that most of your indicators agree, however, a small issue exists. And your small issue is an area that hasn't yet broken, that trigger lines haven't gotten to the other side of. If you're brand new in your first 30 days, guys, you don't really need to worry about this trade. Yeah, give it 30 days to get good at the best, Levon, and then you will work this one in. Because when you take a 50-50 trade, if you forfeit that clear path, guys, smalls are through, large are not, odds favorable momentum, the path isn't broken, right? So my money's worth the perfect entry on the smaller, faster chart. No divergence, right? No losses of momentum. Strong trigger lines. And a tiny window of opportunity so that I can manage my risk. And guys, for me, if an area hasn't broken, if it only has the potential to break, I want my risk minimal. I want my risk as small as it can possibly be. Because sometimes, even though the smalls break through and the large, Jay Solar, here's a great example. One line of the large make it through, but ultimately this area holds and the market goes the other direction. So guys, if you're gonna take this medium probability trade, it's imperative. Let your entry be perfect. And then when we go to Jay Solar's picture, Smalls are through, large are not, and since divergence prints, he chooses not to take the trade, which I like. This is a very conservative way to take this medium probability trade in the beginning. And then Jay Solar, we're going to take this picture one step further because you always give me the best pictures. The recipe for areas broken are that the trigger lines get through, right? When the smalls and the large get through, we consider the area to be broken. Jay Solar, I want you to adopt that same mentality. If you have a divergence and the trigger lines break through it, it resets. The area is considered broken. And that's what happens here. Is your large triggers and your small triggers make it through that divergence line, make it through that divergence level, and it resets itself. And we go back into that first divergence look right here. Does that make sense? Something new to think about, right? So this divergence is present, right? But when my smalls and my large, if they get to the other side of this divergence line, I'm going to consider this broken. And then I'm going to reset the count for those three divergences. Great picture, Jay Solar. A lot of great information in that one. And David B., did that answer your question as well on yours? Awesome. And then Zeba, everything says down. Strong triggers coming from a termination that creates a full reversal. Here's one of those 50-50 trades. Only one divergence with strong trigger lines. Zeba gets in at the bottom of the window. Her stop goes where the market shouldn't go. And Zeba, that was pretty easy profits. What a beautiful trade. Notice how on this picture, Levon, or in general, this picture, when you say what is, like, not what's the point of entry, but why do we do it? Okay, cool. Let's go to the live chart and let me show you. Jay Solar, you can do whatever you want. Sometimes when an alligator's sunning itself, I can poke it with a stick. Is it a good idea? Probably not. My thought is I like momentum because momentum moves the market. But Jay Solar, here's something to think about, right? As your plan grows, guys, I try to not speak in absolutes. I try to not say never when talking about rules. I try to not say that this is the way it is, gospel truth, always and forever. But here's something to think about, Jay Solar. If our first medium probability trade, if our first trade where an issue exists, takes away a clear path. So we insist on momentum and an entry area, and that allows us to take the trade and manage it assertively, right? You feel comfortable with that idea. I know you're great at the 50-50s. So let's change it. Jay Solar, what if the momentum was gone, or the momentum was slowing, but you still had a clear path and you had a wonderful area for entry? Could you call that a medium probability trade and manage it assertively as well? That's my thought on it. I try to never forfeit more than one advantage. If I have the strongest momentum and my path is clear, but I don't have an area inside of favorable large triggers, I may look for a way to find an entry at one of those key areas that is anticipated to hold, maybe based on the rules of termination conditions. So Jay Solar, I think as you grow with the software, you'll begin to make decisions where the momentum isn't perfect. But until you're making money consistently with the best of the best, in my opinion, it makes sense to focus on the best of the best because every time you take a high probability trend trade, you get a little bit better at reading your charts. Does that make, I hope that that answered it without giving you any definitive. If it takes three things to make a high probability trend trade, a medium probability trade has a small issue that exists. Your ability to read your charts will define that small issue, and your ability to read your small charts will allow you to manage a little assertively. So that's a good question. In one of those instances, Jay Solar, let's find one. You have momentum, right? Or you don't have momentum, but you do have a clear path. And we saw this at the bottom. Would you be willing to sacrifice momentum twice? Would you be willing to sacrifice momentum on the smaller chart, hoping that it goes down? Or would you just say, you know what? I'm losing momentum in two places, right? But if I wait for this one, I've sacrificed the clear path, but I haven't sacrificed momentum. I have strong triggers, and I have a tiny little window of opportunity, medium probability opportunity. Great question. And Levon, what's the point of selling areas inside of favorable large triggers? Great question. Your trigger lines, Levon, are moving averages. And what you're going to find more often than not, and we'll just use this as a picture, is that when price accelerates away from that moving average, it tends to pull back to it. When price accelerates away from that moving average, it tends to pull back to it. What we found through an awful lot of study is that if I have a Fibonacci-based area inside of those large triggers waiting for that snapback, it gives the market an area to bounce. It gives the market a place to kind of ricochet, like throwing a tennis ball up against a brick wall. So if I have momentum on my large chart, if I have a clear path on my large chart, my small chart's going to accelerate away from those triggers, right? This is why we wait for the pullback, because it almost always snaps right back to it. And when you've got one of these solid areas for it to bounce off of, man, that's a winner. Well, the big buyers are reacting, and they're creating this momentum. Does that make sense? The big buyers are creating that momentum. The big buyers are recognizing the Fibonacci areas. This small little pullback, Levon, is because there's a group of yahoos that don't care what the large chart says. There's a small crowd, the guys that are going to fight the momentum that the big crowd creates, the guys that are going to fight the direction. They're going to say everything says up, and maybe they take profits here and that causes a little spike down. Or maybe they say this is the greatest point ever from my analysis to go short, but they don't have Nexgen, so they don't realize that there's nothing in the way. And it creates this little push, right? And that little push is what gets you back to your best of the best spot. Does that make sense? The market moves because somebody made it move. And we have nothing to do with that, Levon. We have absolutely, our small little accounts have nothing to do with influencing the market. These guys make it happen. I get to pull out my shark picture. I'm so excited. These guys make the momentum. These guys react to the areas. These guys provide the advantages. Levon, are you familiar with the remora that swims next to the shark until it eats and then it just picks scraps? So this little fish right here, these fish all around the shark doesn't eat them. This shark goes and grabs hold of a tuna and rips it into shreds. And this little guy eats part of the tuna. This guy survives off what this guy creates. Next-gen users kind of do the same thing. This guy gives us momentum. This guy identifies the clear path. This guy who tried to be first, this guy creates that little pullback. The shark eats him, but his tail falls off, and this guy eats his tail. So remoras are, and John hates it. He's like, we're not bottom feeders. We're not bottom feeders. But we capitalize on the advantages created by someone else, and we do it by using a set of patterns that have been proven to win more than they lose. I see it, Jay Solar. I just have to finish my breath. And we work smarter, not harder. Jay Solar, did the small triggers break through the area? So let's do this. Did price reach the area? Price reached Fibonacci support, right? No, they didn't. So Jay Solar, if you take your car and you run it into a brick wall, and half of your car goes through that wall and half of it doesn't, did your car make it through the wall? Absolutely not. No. Okay, so I'm going to clear this up real quick. I see exactly what you're saying. You ready? No, it's a great question. And we're just going to do it visually. All right, so everybody, this is your small trigger. Two lines together create a small trigger. So in order for these small triggers to be through an area, both lines have to be above. If a portion of the line is through and a portion of the line is not, this has not cleared the area yet. Jay Solar, this is like your head peeking out a window. And then on that same token, this is your large trigger. It's not two large triggers, it's one large trigger. Does that make sense? This is your small trigger line. This is your large trigger line. And those two work together to create one entity. So when you go back to your picture, let me figure out where your picture is. The small trigger line is two lines creating a small trigger. And if both of those lines of the small trigger don't clear the area, then they haven't made it through the area. And if both of the lines of the large trigger don't make it to the other side of the area, it hasn't cleared the area. So when we talk about 50/50s, hey guys, this is why we focus on the best of the best before we get into the second one. When we talk about 50/50s, if the market's not coming from a termination condition that creates a full reversal, it reduces the likelihood of success on a 50/50. If the small triggers have barely eked through the area, see how they've just barely cleared it? Guys, that's not a good look. That's not things smashing through areas. This is a gopher peeking its head out of the hole, hoping an eagle doesn't come and take its head off. So let it break. Let it get through. Let it get like that area has a chance to break. 90% of what we do during the day is reading indicators. 90% is waiting for the best of the best. Do you see how on Zeba's chart, look at how far through the area the smalls are, and look at how the large are already starting to penetrate? That's a great 50/50 look, and it creates an easy opportunity for success. Right here, the large triggers just barely eke through and the market reverses. Does that help a little bit? And that's an outstanding question. So 50% of the triggers, meaning, and no, that makes sense. So this is just a language piece, right? Your small triggers are two lines. Your large triggers are two lines. So when we talk about small triggers breaking through, both lines of the small triggers break through. I think it's a great question. And that's why I use this picture. Yeah. And thank you. And Jay Solar, I guarantee you cleared this up for quite a few people. That's why I use this picture, showing both sides, both lines of the small triggers make it through the area. Both lines of the large triggers remain below. And it's not until both lines of the large and both lines of the small make it through the area. And I think this is great because you're probably going to have me changing my language on this one a little bit. Does that make sense to everybody as we talk about 50/50s? Awesome. And again, guys, this is the magic of this classroom. All it takes is one person asking the perfect question, and I'm not resistant to changing the way I teach, to changing the language that I use. So your small triggers are a cohesive unit, your large triggers are a cohesive unit, and we'll let both lines of both get through. Yeah, and we'll let them get through with authority. We'll let them get through with odds favorable momentum. And the cool thing is, Jay Solar, is in order to have a 50/50 look, the biggest key element is odds favorable momentum. So even in this scenario, there's nothing pushing that market down. Ah, Debbie, do I have another picture I can look at before you go, or did you just post the one today? Okay, awesome. Want to make sure. Well, then I hope that your therapist is nice to you, and I hope you have an awesome weekend. And we'll see you on Monday, and we'll do it all over again. Great trading this week. And Jay Solar, I'm not going to suggest that this is what you're doing. But guys, one of the things that happens, the more you learn to read your charts, the more you start looking for these opportunities, is you're going to begin to create scenarios in your head where you're like, well, this is kind of the rules met. This is kind of what I'm looking for. This is something that has the potential to be an entry, right? But it's not really a rules-based entry. And new users tend to read their charts and trade the read rather than the rules once they learn to read their charts. I know that I did it in the worst way. I did it in the absolute worst way when I started. Because when I started getting good at reading my charts, I started trying to anticipate turns in the market. I started trying to get in first, to be in there, right? Um, so that's just me. All right, Ace J, the trend is up over here. You got stopped out. Large triggers are up, and I think that was the key on this one. And then it's not letting me zoom in. Let me see if I can just do it on my computer here. And this is kind of a cool one because I think that this is a pretty common mistake. Ace J, are you with me in here? We talked about it briefly, but I think this is a great lesson for everybody. This is the large chart. And I like this read because you're like, man, we came really close. The small triggers got below the large. The trend changed, and I'm going to start thinking about those short trades, right? I'm going to start thinking, man, this market may be reversing. My large chart suggests it. And then Ace J, one of the coolest things that you'll begin to do as a new user is you'll begin to pick up in the moment as you grow a little bit. Didn't price come back to support? That's okay. And I'll get to it. I do these in order. But didn't price come back to support and absolutely no trigger lines break through? Do you see how that worked, everybody? All of my trigger lines broke through resistance. Resistance acts as support. And then when price pulls back, all of my trigger lines remain above. Guys, this is an amazing rule number 2 opportunity to just say it's too soon for shorts. It's too soon to trade into this area that may stop the market. And then what that does for you, whoops, I have to get my computer back down low. And what that does for you is it keeps you from looking for that short. And it keeps you from getting stopped out directly into an area that's likely to stop the market. Great picture. Safia, when price pulls back to support here, we came from here, price reaches support, guys, and it's the recipe, right? It's the recipe. Rule 2 is not met. As this market comes down, I don't have a clear path. I'm straight into support and all my trigger lines are above. You guys that are taking momentum trades, not yet, Jose. You guys that are taking momentum trades, guys, one of the rules is you have to have a clear path below you. The same is true here. You have to have a clear path below you. Clear path, guys, no areas that the market may react to. I love it. Yeah, it's a termination condition. So Ace J, your brain was in the right spot, man. You're like, cool. My trend changed, my smalls are down, but the monkey wrench here was this area of support with all the trigger lines above it. It created a path that wasn't clear. Does that make sense? Momentum didn't switch to the down. The small triggers went down. Momentum is indecisive because the triggers don't agree. Does that make sense? The larger up and the smaller down. So there's kind of that, we're not sure what we're going to do just yet. When both are wide in the same direction, that separation is present. Giddy up. Look how that market goes up. This is one of those they're trying to figure out what they want to do. And they're kind of caught in between two areas as they try to figure it out. And this is where we can just sit on our hands and say, let them work it out. And then once they work it out, man, great things happen. Awesome picture. Termination condition, weak triggers, multiple divergences, sitting on hands and doing nothing. Great picture. Termination condition, termination. Guys, this is a consolidating market. This is a market that needs to either clear this one or this one, and then eventually it's going to break out. This is one of those patience pieces, right? Flat triggers, they didn't agree, the path isn't clear. Just waiting. Does everyone see that, Gary? This is a brilliant picture of when sitting on your hands and doing nothing is one of the best things that you can do. And that's what it's doing right now. Let's look at it. Termination creates a full reversal. Termination does it again. There's a pivot stop out. I can't go short yet because my trigger lines don't support it, right? I'm not going long because it's directly into resistance. So we're just waiting. We're waiting for that agreement, waiting for everything to come together. And then Levon, you asked if that was a good pullback on his chart. It wasn't because the rules weren't met, because we're trading into that termination condition. And if the rules aren't met on the large chart, the small chart should never even come to play. The small chart should never even, yeah. So now we're just waiting, guys. We're waiting to see what that NASDAQ's going to do. And it's okay. Let's wait. You don't have to be first, guys. And I want to remind you, you people that are trying to catch every move, if you make $500 a day, $500 a day, a couple conservative trades, that's $2,500 a week, guys. That's a $10,000 month, which puts you at $120,000 for the year. It's not about catching every move. Yep, Abdulaziz, it's still there. What do we see, guys? Weak triggers, right? Right at a fib. The large haven't, well, the large just got above. Absolutely no momentum. Everything's above these one-to-ones. I've got multiple divergences. I don't know about you guys. With my large up and my small down, I don't have a trade. Abdulaziz, is that what you're wondering? My large triggers are above resistance. My small triggers are below that area. My one-to-ones have all the triggers above it. My large are up. My small are down. Who cares what's happening over here? There's nothing to do here, right? Guys, isn't that amazing? The rules aren't met. I don't have a 13 range, Abdulaziz. And I'll tell you what, and this sounds horrible. If you take a trade, I'll never root against you. But if you go long with this look because some other random chart told you to do it, then man, good luck, right? Good luck. I hope this smashes down 1,000 points without you in the trade to remind you that your rules are in place for a reason, right? Your advantages of momentum are there for a reason. Your advantages of a clear path are there for a reason. If this area is going to break, it's going to break. Let it break. You don't have to be first. Show me a picture of your 13 range, Abdulaziz. Will you do that for me? Let me see what you're looking at, and let's put it up against this one as well. And what we may find is that there's an opportunity to incorporate charts to help us on a tiebreaker when one says up and one says down. Because that is definitely something that'll happen as you grow with the charts, right? As you start to recognize things more and more. And then Gary, we already talked about your last night trades. Those were brilliant trades. Nice job. Whoop, Jose, I almost skipped over you. Sorry. Jose, odds favorable momentum, no terminations, beautiful point of entry, cost of doing business. For me, Jose, it's still a 50-50 on that divergence line. We know it's there. The large haven't quite broken it. It's super close, right? But Jose, that's a great look. It just didn't work. Yeah, same case as yesterday. That's a beautiful look though, isn't it? That's odds favorable. That's everything up, smashing through. Jay Solar, when I see this pink line until both of my triggers get above it, I respect it. It's there. The same way, I respect this resistance until both trigger lines get above it, even if it ends. So, Abdulaziz, this is an awesome picture, right? You say that this says long, so your range chart doesn't mean anything until your rules are met. That's the first thing. But do you see how you're looking at this long? You miss two reversal bars directly from resistance with every trigger line below it, right? Doesn't this say that this termination condition has a pretty good chance of holding? Don't these divergences begin to support that? Don't two reversal bars from resistance in an outer band with all the triggers below kind of suggest that longs may not be the best option? Does that make sense, Abdulaziz? I like that everything is up here, but this says it's risky. And it may go up, but the large chart wins once again. So Jay Solar, it stops printing, right? And I know that it stops printing right here. And I'm not saying you're welcome to take it. But what I'm saying in my experience is that if I have this key number, right, everybody else sees it too. And even if it stops printing halfway inside of the large triggers, they still know it's there. They still know that that key number is present. They still know that that was a divergence high. It doesn't erase the fact that it happened. So for me, just knowing that it's there, knowing that it came through, that's a big deal for me. That's for me. You're welcome to take the trade. It's still a good look. But guys, I'm the most conservative trader that you're ever going to meet. I'm the guy that absolutely hates to take unnecessary risk because my goal every day when I wake up is to win. My goal every day when I wake up is to win more trades than I lose. So every time I do it, I focus on having the advantages. Gary, and that's a great example. If it's going to break, it's going to break, right? These three divergences, those weak triggers. Abdulaziz, that's a great look. That's price reacting to Fibonacci, and ultimately it may go up again. But it's awesome to be able to sit on your hands and wait a little bit and wait for it to happen. Ace J, weak triggers. You were you were saying this was happening, unsure if it will reverse. So here's that picture, Ace J. You were saying it's got momentum, right? I remember. No momentum here. And Ace J, I'm going to throw something out there, and you don't have to. I love a large chart on the left and a small chart on the right because I read left to right, like if I'm reading books, magazines, anything at all. Same picture. But see how it's at resistance? Not the same picture? Okay. I love this. Unsure if it will reverse. That is the greatest thing you could ever type on a chart. This says I'm at a key area and I just don't know what's going to happen. But I recognize the area, so I'm going to sit on my hands and wait. This is a great picture of a termination condition. Great picture, Ace J. Jay Solar, I'll get to your picture in just a minute. I'm going to go through in order. I'm going to grab some of these pictures, and then I will be down to answer that question. I think it's a great question. This is GWC Trader. He says with odds favorable momentum and everything down. This one, okay, 933, 933. That's this short right here. The long didn't work. That's the one that everybody took. I like seeing that one. Maybe a big stop. Small smash through, large don't, no divergence. Your triggers are a little split, but you handle it beautifully. You get in right at that pivot stop out and take it down. GWC, that's great chart reading. That's a nice trade. Ziba. Small's below the large are wide. It hasn't reached anything. It pulls right back to resistance inside of favorable large triggers. And you take it down to the fib. Ziba, another beautiful trade. Not a good top, just divergence, right? Just a pivot with a loss of momentum. It's not a termination condition that creates a full reversal. It's just a pivot with a loss of momentum, but you have odds favorable. You have absolutely nothing in the way, and you take the picture perfect entry. Beautiful trade, Ziba. That is a rules-based, high probability trend trade. Jose, a little weakening of the triggers here. The smalls have returned. A little divergence. Jose, there's that 21 chart pivot stop out. Do you see it? These guys just pushed a little lower. That's all it was. They wanted to go a little bit lower down to that next area because just is what it is. Loss of momentum. Loss of momentum on your range chart. Weakening of the triggers on the large chart, and then it corresponds with that even higher time frame pivot stop out. There's bound to be a pretty tough reaction there, and that's exactly what you got out of it. I'm not opposed to more charts. Just make sure you're taking the information off of it. Make sure that you're recognizing. Zeba, directly in determination conditions. It's not a 50-50, is it, Zeba? Jay Solar, here's a great example. One line of the small triggers are through. I'm sorry, Sophia. Gosh, I got to stop doing that. One line of the small triggers haven't made it through the area. Not a clear path, right? Textbook termination condition. All that momentum, Sophia, got you up to the area. You took profits at the area. You knew that that was a problem. And then it pulls back to the midband. So price already reacts and it comes back up and none of the triggers are through. Yeah. And it wasn't in an area and it was into a termination condition. I love that you got break even +1 on it. But at that point, you just got a little bit greedy. That is textbook termination condition. Great momentum to get up to it. Yeah, watch out for those terminations. But Jay Solar, do you see how that was a great example of only one line of the small triggers breaking through? So we're going to say that it's not broken. Safia, that was my biggest problem, and it took me a while. And remember when I told you that what I had to do is I had to annotate my charts before every trade. The one thing that I focused on more than anything was whether or not it was a termination condition. And I literally recited the rules for termination conditions out loud in my head. And that's what kind of helped me break the habit. Um, so Safia, there's your termination condition. I'm not sure what's getting you into the market here. You say no term on the large chart. You're coming back up to the large triggers. And you're really below everything. No bodies of the bar have made it above those trouble spots, Safia. The larger down, the synthetics are against you up here. The triggers are flat. I think you just got a little excited there. I love that it worked out for you. Yeah, but definitely that's not even a rules-based momentum trade. You didn't get a full reversal bar off of the termination condition. You called this weak, right? That's pretty strong. That's a termination condition, but it hasn't created a full reversal. And you're coming from essentially a pivot stop out up here. And there is no fib or midband that you're trading from. You're trading from below. Are you okay with that? Can you hear me now? It's just there was no reversal bar, right? And isn't that the first thing on that momentum trade that you look for? The termination condition and then the reversal bar? And what you're doing, Safi, is you're confusing two types of momentum trades. There's the momentum trade that has the termination condition, the reversal bar, and then you look for the pullback, right? And we didn't satisfy the rules on this one. And then the other momentum trade that you're looking for that you've been doing really well with is when everything is strong, right? When everything says up or everything says down. And let me see if I can find a picture. The other one is when everything says down and everything is clear and everything is strong, taking that little pullback to the area in the middle of the move, not off the termination condition. Does that make sense? This is a momentum style trade where the bar bodies get below, the triggers are strong, everything comes through, and then there's the other one that happens after a termination condition. No worries. So remember that the momentum style trade that uses a termination condition, Safia, is going to be close to that termination condition. If you're far away from that termination condition and it's the middle of a move, then you're just looking for momentum. It's a different type of trade. Great pictures. But I think that, and once again, write your rules next to what's happening. So do you have a checklist for the momentum trade? Good top or bottom on the large chart, no terminations. Okay, so that was it. And I think the one thing that needs to be added to it, and guys, I just did this to get you guys pointed in the right direction. The pictures, and this is a look of yours, that reversal bar prints, the bars come through, and then it comes back, right? So this picture is a good one. Termination happens, full bar, and then the body breaks through, and then it pulls back. So that checklist may need some refinement. I don't take momentum trades. I was just trying to help you guys out. Work on consistent, but I'm a big fan. Write your rules separate from one another. Write them next to what's happening. Like if you have odds favorable momentum, write the rule next to odds favorable momentum. If you have a clear path, write the rule next to a clear path. Good top, everything says down with a clear path. Ziba, do you see how the bodies of the bar break through and it pulls right back? Safia, this is your momentum trade right here. It's in the middle of the move. It's not a trend trade. It's not a termination creating it. It's everything is cranking down. It breaks through, pulls back to the area that had broken, and then continues through. So Ziba, this line becomes a great entry, and it creates very minimal risk as well. Nice trade. Great chart read, putting you where you need to be. Gary, 50-50 trade with divergence. That one just doesn't work out. 15,485, 15,485. Gary, the one thing that you'll notice here is you had room to get back to the small triggers. Are you with me, Gary? I love this look, guys. This is a great lesson for you NASDAQ traders. First of all, 50-50 with divergence, and I'm not saying don't take them. I'm saying be careful. But do you notice how you were so far away from those small triggers, Gary, but it came right back to them and they acted as resistance? That's a great management point. And that's still about 7 points up to those triggers, right? You can take $100, get to break even. But if those small triggers hold and start pushing down, it's a great opportunity to get out. Guys, you see this a lot on the NASDAQ. And John and I were talking about it this morning. If I have more than a full bar to get back to them, I'll take it at the area. But if those small triggers are anywhere near most of the 50-50s with divergence work, Jose, I don't take them on NASDAQ. I won't touch a 50-50 with divergence on NASDAQ. That's awesome. Then I'm taking the wrong ones because I tend to get my butt kicked on those. So I just prefer not to take them. But guys, we're all different, right? Everybody's going to do what they want to do. Everybody's going to do what's comfortable to them. Everyone's going to trade the patterns that make them the most comfortable. And the cool thing is, guys, is all I'm doing is helping you read your charts so that you can make those decisions. Joel, odds favorable, clear path, pulls right back. Joel, where are your synthetic triggers on your 5-1? Jay Solar, I promise you, I saw your question, but I'm going in order. 50-50 with strong triggers. Sometimes they're going to win, sometimes they're going to not. John says it's okay. That's got to be for you. That's got to be a decision that you make for yourself. I won't do it. On the NASDAQ, I won't do it. On the S&P, on crude oil, J Solar, perhaps. The best way to answer this question, and I'm sorry, I didn't mean to, it's the third time. The best way to answer a question, J Solar, like this is to go take a picture of a 50-50 with very strong triggers from a good top or bottom. Go find 10 pictures, 20 pictures of this exact scenario and create a baseline. Does it work more than it doesn't, right? Because a lot of times if you're coming from a great termination condition, and this doesn't happen to be one, and you have those crazy strong triggers, and you have only one divergence, but what's the other part of that? You have to have crazy strong triggers over here too, right? That momentum has got to be absolutely screaming. J Solar, absolutely. If I'm coming from a termination that creates a full reversal that gives me unbelievably strong momentum, and let's see if I can find an example of where that may be. Crude oil hasn't had any today. So let's look on a different market. This is a termination condition that creates the full reversal, right? I love it. But I'm into a termination. So J Solar, let's hypothesize. If the small triggers break through this area aggressively, if the momentum is outstanding, if the top is perfect, and I get one divergence with crazy strong triggers, I'm probably going to be okay taking that trade. But I've also got 3 years under my belt, right? I've got 3 years of patterns. I've got 3 years of having seen this and taking pictures of it hundreds of times over and over and over. But what I can tell you for the brand new user is that when that divergence prints, it affects the quality of the trade. So much so that I put it 3 times in here. If divergence prints, the brand new user is better off not taking the trade and just taking a picture. But until you get those repetitions, and that never broke, right? Until you get those repetitions, why not keep it conservative? And John Novak says that if you're coming from a strong top or bottom, divergence should mean nothing. Does he say that about 50-50s? Or does he say that about high probability trend trades, right? John Novak says a lot of stuff, and most of it's brilliant, but he also says a lot of stuff about a lot of scenarios. And it's pretty typical for people to misunderstand the lesson sometimes. Look how this termination condition is holding, even without divergence. It's holding. Look at how the synthetics and the large. So it's a great question, Jay Solar. And what it sounds like is you're saying, I'd have to see your plan and I'd have to see your rules. But if your rules say divergence, no trade, then only two things can happen. You can either break your rules because of a condition, or you can rewrite your rules based on the phenomenon of a strong top or a strong bottom giving you an advantage as you take that trade. Does that make sense? I'm trying to find an example of a 50-50 coming from a strong top or bottom. So here's a strong top, here's a strong bottom. That's at 836. So at 836, we have a termination condition that creates a full reversal. The full reversal gives me odds favorable momentum. The odds favorable momentum ultimately gives me a 50-50, and the 50-50 has a divergence. Am I willing to take this trade? Probably because it's coming from a strong top or bottom, because my smalls are outside of my large. All those different scenarios factor in. And Jay Solar, you're getting really good at reading your charts and you're getting really good at these conditions. But one of the things that I've recognized is that this plan works, right? Simplicity works. And the more times you see this happen, the easier it becomes to change direction, to change your plan, to adjust for the patterns that you see and recognize. Does that make sense? Awesome. So start, and guys, this is why we talk about foundations. And Jay Solar, you are giving me absolute gold today, and I appreciate you so much. This is why we build foundations. Because when you build a foundation, what you're doing is you're recognizing advantages. And that's all it is. That foundational trade creates recognition of advantages. The recognition of advantages as you grow with the software will create more and more opportunities, right? So we're in a classroom with people on day 3 and on day 303, and you're all going to throw different questions at me. And I'm always going to come back to you with, what do your rules say? What do your rules say? Joel, in your trading, I see a desire to follow rules, which is outstanding. The other thing that I noticed in your trading, Joel, and the last one that we talked about, let me see if I can find your picture, is, Joel, where the heck are your synthetic triggers? It's an incomplete picture, isn't it? You have small triggers and large triggers, but you don't have synthetics. And if you did, Joel, what you would have noticed is that your synthetics were way down here, that gap was huge back to them. And price was likely to close that gap. Does that make sense? So reload your template on the 5-1, Joel. And you would have seen split triggers and you would have seen that big gap. And it might have kept you out of that trade. Guys, everyone in here is freaking amazing. Everyone in here is becoming better and better at reading their charts. And just keep that path, right? Keep that path. Keep trying to be a little bit better every day. David B., odds favorable, everything's cranking, no divergence, beautiful entry, money all the way down. You moved your stop one tick above the fib. David B., I love this picture because this is that momentum trade that we just talked about with Safia, where the bars break and it pulls right back to the area. I'll do the same thing because I don't like giving it back. But if you're planning on holding, it's cool. You're kind of in the pathway, David B. Safia, have an awesome weekend. Okay, awesome, Joel. David B., do you see how when the rules are met for a high probability trend trade, if you put your stop at a potential entry, it's probably going to get hit? And this is where you just have to make a decision. You're either cool with the idea that it gets hit, or just exit the trade and wait and see if the pullback happens. Great picture. A lot of pictures today. I appreciate you guys. Jared, let's see what you're doing, my friend. Jared says, odds favorable, everything cranking, pull back to support, and he's getting paid at the fib. Jared, that's too pretty not to steal. Beautiful. And Jay Solar, there's one of those instances where it stops printing, right? It's going to happen. So you make decisions. Is that much momentum in this low risk entry? Is this a scenario where I'm willing to take the trade at the area? And absolutely, it's beautiful. This may be one of those instances where you're cool with it. But that's the decision that ultimately everybody has to make for themselves, guys. You were looking at this line, right? And you were like, but it stopped printing. Look at the strong triggers. Yeah, it's just one, right? It's one divergence. Look at the odds favorable momentum. Isn't that a great advantage? And this is a good way to look at it. I have strong triggers, and I do have one divergence, but look at your area of opportunity. Look at the window of opportunity, Jay Solar. It's one line wide. And if you're in at 80, you've got 7 or 8 ticks of risk on it. And then Jared mentioned he had confirmation over here too, even though he didn't need it, because that's such a solid look that it gives him that opportunity to continue. You can say that it was, right? So everybody's plan, right? Jared's plan says, hell yeah, I'm taking this trade. Your plan may say no. But everybody's plan grows. And this is why I always say, guys, start simple. And then you're going to grow your plan. Start easy. Make money with simplicity before you expand. Don't worry about what everybody else is doing. Everybody's plan is going to be different. Everybody's plan is going to have different elements that maybe your plan doesn't have yet, but one day your plan may. John Novak laughs at me all the time. He's like, Mark, you're slow to come around, but you eventually will. The trades that John takes aren't my trades typically. Ziba, perfect momentum trade. Everything says up, the path is clear, the bar is clear, and it pulls right back. You enter the trade and you make money. Picture perfect. Jay Solar, this isn't my trade, but I love it. It's great. I understand it, right? It's pretty cool. But that's the one that Ziva's comfortable with. That's the trade that she sees clearly. So that's the trade that she's taking, that she's making money on. And that was hard for me to grasp in the beginning, guys. It was hard for me to grasp that every trade doesn't have to be my trade. Every trade doesn't have to be my trade. I don't have to like it. I don't have to want to take it. I don't have to add it to my plan. But if I look at it and I study it, if I become a student through every motion of the market, I'm going to get better. Gary, pivot stop out, strong triggers on a 50-50 because he hadn't reached support yet. He says, I'll take this trade. But Gary, that is such a solid termination condition. I'm not sure I would have held that last contract. Every chart said that market was likely to stop. Great trade, though. Nice job. Jay Solar, can I address that? You said that you see growth in her every day. And I think that's amazing that you would say that in this classroom. I think it's wonderful when you guys see that in other people. Um, One thing that I've noticed, and this is myself included, is that I don't always see it in myself. I don't always see the growth in myself. You won't always see the growth in yourself. But I tell you that everybody on the outside looking in, Jay Solar, you have grown immensely. You are such a fantastic student, and you're always looking for that knowledge, and it's going to pay dividends. Continuation trade. Who is this on the NASDAQ? I clicked on it, but I didn't see who it was. Gary, is this you? It is. No, that doesn't look like yours. Ziba, if your Apex account says the opposite, it means that you're not showing me losers, right? If all you're showing me are these winners, what good is it? I haven't seen a loser yet. Are you down money today? Or are you up money today? I believe I've seen 3 winners from you. You're down money today? Oh no, that was the I am from the other. Okay, because I've seen nothing but winners from you today. Alan, everything says up. Everything's cranking. The path is clear on your 34.5. So you take the pullback to the 1-to-1s with everything up. Alan, brilliant. Absolutely brilliant. What a great momentum trade. Not a high probability trend trade, but it's a great trade. That's a high probability trend trade. And you entered at the area. Why? Because it was a clear path, because it was odds favorable. Beautiful. And you make money down to the fib. Alan, you're finding your mojo, my friend. And you're managing these trades beautifully. Once again, picture perfect. What a great entry. Money, money. And Alan, right when I praise your management, Ziva, great job. And right when I praise your management, Alan, you hold for so long. Great trading, man. Great trading. But you know that that big red fib with no triggers through it is a great place for profits, right? Awesome. Great work. Guys, you're all doing amazing. Everybody's growing. There's Nexgen riding the bow wave. I love it, Gary. Cool picture. A buddy of mine sent me a video. He just delivered a boat from Houston down to the Keys for a guy, and he had like 70 dolphin in front of it. It was amazing. Finman, you're saying everything says up, and the market went up. And you got in at an area of support inside of favorable large triggers, and you got out at resistance with no triggers below. Beautiful. Ace J, termination. If you took the long, would you take profits there? Ace, are you with me? Ace, it's easy to say after the fact, right? Well, yeah, that's where I should have gotten out. But Ace, couldn't we say that if you took the long here, okay, if you took the long here at 32, yeah, that's a beautiful profit target. That's Fibonacci resistance. It's a beautiful profit target. And if you got in down here, that's a beautiful profit target. If you got in right here, this is a beautiful profit target, right? Red lines and long trades are a great place to take money. Blue lines in a short trade are a great place to take money. And what you're going to have to do, guys, is if it breaks through those areas and smashes through them, you have to be okay with it. Jay Solar. Jay, I like this one. Mr. Solar, Jay Solar. Oh, you're getting there. Ace J, you're new, man. Every day gets better. Jay Solar, bad bottom, right? It's not a termination condition that creates a full reversal. That's okay. You have odds favorable momentum. It is a 50-50. Are you with me so far, Jay Solar? Price reaches a mid-band. The large triggers are a full bar away. That creates a termination condition on the mid-band. Are you familiar with the gap theory? If price accelerates away from those large triggers, it's probably going to close the gap. So Jay Solar, here's the brilliance of your trade. Is you didn't try one of those silly little momentum trades directly into the termination condition. You let it close the gap, and it closed the gap to favorable large triggers with all that momentum. You let price react to the mid-band, you let it close the gap to the large triggers, and it gave you a beautiful, almost zero risk entry, and you take quick profits. So Jay Solar, you broke the rule on termination conditions, right? But because there's no divergence, because there's a tiny window of opportunity, because there's momentum, your execution was flawless, and it created an opportunity to make money. Do you see how plans expand? And here's my favorite part about it, is you weren't sure about the termination condition, so you just managed it assertively. Once again, a show of maturity, a show of growth, you managed your risk rather than hoping for profits. Great job, Jay Solar. Some of my favorite things are when you guys take these trades and you may not realize it in the moment, but your ability to read charts is really showing through. And Abdulaziz, we talked about this one, right? Just letting it work itself out. Hey, M. M trying to take one of those momentum style trades, right? Is that what this was, M? Cool. So one of the biggest things on that momentum style trade, just creating an advantage, is that no trigger lines break through that area. The termination condition that you're looking for, you don't want to see those trigger lines breaking through. You really want it to be a solid area without the triggers through. The full bar prints, I love it. What you really have here at this point is more of the potential for a trend trade because price comes all the way back down to that mid-band area. And those large triggers are way up here, right? So it's likely to close the gap. And it did. It closed the gap right to your second entry. This is one of those times where I'm going to try and be a little more patient. And I think you said the same thing. You got in, you said, oh, wait a minute, that's going to be up higher. And then you recovered beautifully. You let the market react to pull back to that resistance. And then you take the perfect trade. Nice job. Great read. You had direction, you had momentum, you had no divergence. You just had to let it pull back to those large triggers. And Levon, that's another great example of why we like those trades to originate inside the large triggers because price loves to pull back to them. I would say so, Joel. Gap theory, bad top, price accelerates all the way to the mid band and the large triggers are all the way up at that reversal bar marker. Very much gap theory. Let those large triggers fall a little bit further. Close that gap. Mike M. There's that gap theory again, right, Mike? Are you with me? Odds favorable momentum into the mid band. Hell yeah, you got lucky. Price reaches the mid band. Large triggers are a full bar away. And look at where it closes the gap, right? Right up to those synthetics. And this is NASDAQ too. So see how strong those small triggers are against you? That's your little indication there that it's probably going to push up and close that gap. And then when you get a close on the correct sides of those small, when the gap is closed, I love this trade. Brap, brap, all the way down to that key area. It's a great trade. It's a little early with a lot of risk. That gap theory gets you in at the better spot. It has you waiting for that best of the best. And the cool thing, Mike, is if you wait for the close on the correct side of the small, if it decides not to go, then it goes. Guys, did you just lose me? Shit. You can still hear me? Ah, it sounded like my earbuds just crapped out, so hopefully they make it to the end. So great picture, Mike. Maybe the noise cancellation died. Gap theory keeps you a little patient. And then Gary, 50-50, right? You are coming from a good top. Jump on simulator if it affects you from not trading in a couple days. Simulate for a day. Get your groove back. It's okay to do that. That's what I did after my vacation. I stayed on simulator for the first day. So Gary, there's that 50-50. No divergence, but look at your trigger lines. And I think for me, Gary, if my large are all the way down here and my synthetics are all the way up here, that's just too much going on. That's too much. And I think you managed it beautifully. But that's a tough look with that giant gap between the two. Good picture. Oh my goodness, I'm just about to the end. Odds favorable, everything says up. Just waiting for a pullback, Joel. I like it. I like how you're able to anticipate. You can read your rules, you can get there, and you know what you want to do ahead of time. Strong triggers, clear path. One divergence doesn't scare me. Jay Solar, there's a great example of when that one divergence doesn't bug me at all because I have a clear path, because I have odds favorable. Beautiful entry. And it lines up with an HVA line, which is always great right at those small triggers. And let's go over to crude oil and see what happened. It's still working its way up, isn't it? Strong triggers, clear path. Guys, look at that entry. Look at how it bounces. Levon, do you see it? Right off of that line, right inside of favorable large triggers. Is it just me or is it amazing? Gary, I think you put a lot of emphasis on the mid band, which is cool, but remember guys, it's areas inside of favorable large triggers. It's not just a mid band, it's areas. So I want to do this. Let's take the picture. Whoops. So if I were to annotate this chart, guys, I would take this picture and I'm going to use that call out button. And I'm going to say rule 1 gives me the advantage of momentum through strong triggers, right? Let's really reinforce what it is that we're looking for. And I'm going to draw a picture. This is exactly what I'm looking for. That's that strong triggers. And then I'm going to do this. Price hasn't reached an area, so no term present. I have a clear path. And this is what I'm going to do is I'm going to draw an arrow right up to the top of that bar. And I'm going to say, hey, look, absolutely no areas hit. And then for bonus points, there's my target, that fib off in the distance. And then the most important thing you guys can do is right here. Buy a pullback to an area inside favorable large triggers. You can abbreviate a little bit. And there's my area inside of favorable large triggers. This is 2 ticks of risk, 3 ticks of risk on this trade. And then I want you to take this picture. And if you took the trade, show me in class. Let's talk about it. I'm going to give you a gold star. And if it really is a high probability trend trade, do you see how by writing my rules, there's no question in my mind this is a high probability trend trade? And it's still going. Abdulaziz, making it look easy, right? Gary, you're waiting for the termination to clear for a short or for it to roll and go the other way for a long, right? He's in at 82.37. Guys, that's 57 right there. That's $200 on one contract. He's up and nothing has changed. If he's trading a 10 lot, that's $2,000 one trade. If he's on a 100 lot, he just made $20,000. He can exit this trade and go buy a yacht. On a continuation trade, I'm not sure what a continuation trade is. A trend trade? Jay Solar? This is a continuation trade, right? This is a continuation of the trend with odds favorable momentum and a clear path. Am I misunderstanding? And I may be. Or are you talking about a momentum style trade? If you're not sure what it is, oh, a momentum style trade is using momentum to enter the market. That's a good looking trade too, isn't it? I'm going to go to Discord real quick. Guys, I want you to see this. Oh, Ziba, have an awesome weekend. So this is from Discord, and this is the trading rules, guys. And here's your high probability trend trade. This is your first trade. Master it. Get great at it. Then there's a high volume area trade. Master it. Get great at it. And then Jay Solar, here's your momentum trade. Ah, John. Something's crazy on your... Oh, that's your log me in rescue. You took a picture of that. You got your log me in, John, not the trade. I hope they got you all fixed up though. No worries. Guys, what does the large chart say? Up or down? It says up, right? The momentum says up. The path is clear. There's the perfect entry. What's changed since the entry? Anything at all? The momentum is still there. The path is still clear, right? The only thing that's changed in this trade since I entered is that my small triggers have now supported the trade as well. Let's see if those small triggers help push us up to that next key area. This is a great management lesson, guys. Ask yourself, what changed? J Solar, medium probability trade. These aren't momentum trades. This is a strong trending market. This is weak triggers, clear path. In J Solar, if price pulls back to support and all the triggers remain above, isn't support likely to hold? That's basic termination condition, right? Price reaches an area. Where are my trigger lines? All of my trigger lines remain above support. Support's likely to stop the market. Does that make sense? That's the first piece of this puzzle. You don't have momentum. This isn't a momentum trade. This is an opportunity to trade with the trend. But here's the challenge, Jay Solar. You do have a clear path, but you don't have momentum. And you don't have areas inside of favorable large triggers. And look at this. It bounces, divergence prints, and it comes back to it. Divergence prints, and it comes back to it. Over and over. Are you willing to sit through weak triggers and multiple divergences just because this says that this area has the potential to hold? So I don't have rules for this trade. If I had to come up with a quick set of rules for this trade, I'll show you exactly how I would identify it. What I need for this trade to happen is, Jay Solar, I need a 21-3 chart with odds favorable momentum and no termination conditions. Does that make sense? I need a 21-3 chart with odds favorable momentum and no termination conditions. And I don't even know if I have one built. I may. I think we built one yesterday. What time was that picture? Was that crude oil? I don't remember what market it was. Nope, that was the S&P. So let me show you when I expect an area to hold. That particular trade, J Solar, in order for me to take it, in order for me to be comfortable taking that look, my 21-3 chart has to look like this. My 21-3 chart has to be screaming in the direction of the trade, and it has to clear all the areas. And then this becomes kind of a trend trade using a higher time frame. This is what's called an edge trade. And without the advantage of odds favorable momentum and absolutely nothing in the way on a 21-3 chart, you're guessing. You're hoping that this area of support holds. Does that make sense? Cool. I love this trade. Abdulaziz had some great examples of it yesterday, but it takes an additional chart. It takes an additional read. It takes additional conditions. And then you still have to, yeah, you still have to hope that this area holds. And on a trade like this, you may take it and manage and take it and manage because price reacts to these areas. Yeah, I love the trade and I'm a big fan of it. But it's a little next level, right? It incorporates reading more charts and just going through a little more information. Not at all. It's not at all chasing. And let me here. I watch this. I'm gonna just I'm gonna cheat a little bit, and I'm gonna create a scenario. All right. So I have that, and then I have odds favorable here. So check this out, J Solar. If this is my look on the 21, so pretend like this off to the left is my 21, and it's odds favorable momentum, and it's absolutely no termination conditions. Then this edge is likely to hold based on this momentum. The same reason that a trend trade here is likely to hold based on the momentum there. Does that make sense? Awesome. Great question. Study them. Take a lot of pictures of them, right? See what happens. Present them in class. We'll talk about all of them. Gary, odds favorable, clear path, a little weakness here. You can't move fast enough? No. If you're trying to catch a market flow signal, Gary, on NASDAQ, you have to wait for the signal and then hope for a little retracement to get you back in. NASDAQ moves just way too fast. An edge trade is so painful. You'd wait to master the trend trade before starting the edge. I agree. John in Alaska. Beautiful. Picture perfect. Absolutely outstanding. And here's the great thing is why do you need more when this happens 4 or 5 times a day and 70% of them win? And then let's go back to crude oil. Here's the after. Abdulaziz, you made it to resistance. Fantastic. Beautiful trade. Have an awesome weekend. And man, it's nice to have you back in class posting. Thank you. Guys, a lot of digressions today, a lot of amazing pictures and some wonderful lessons. It's a lot to take in your first week. And new users, please understand that I realize it's a lot to take in on your first weekend. I got you. So we're going to do market replay. Is anybody using NinjaTrader 7 or is everybody on 8 at this point? I'll love to hear that. So we have 7 and 8. Okay. Jared, do you need help with market flow on 7? We'll do both. Let's do both. I'm going to get rid of my workspaces first, guys. PFI, you're asking me to instill testicular fortitude into your life, right? You're saying, damn it, Mark. What changed? Ask yourself that question, PFI. From this point of entry, what changed in that trade? Other than the small triggers began, it was taking too long. All right. You're going to hate this answer. Work through it. Sometimes trades take a while. Do you want to know? It wasn't that it took too long, PFI. Do you really want to know what it was? That little fluctuation on your small chart scared the shit out of you. That little fluctuation on the small chart made you think that you might have to give some of that money back. And you're exactly right, because you don't have the trust yet. You don't have the trust that odds favorable momentum and a clear path gets you where you need to be. And Jared, for you, if you had a trailing stop and got stopped out, your stops are too tight. With this look, they have to come and get me. That's it. They have to come and get me. If I'm placing a stop on a runner, it's behind the area of support inside of favorable large triggers. But guys, I have trust in the system. I have my repetitions. A lot of you guys are developing that trust. No, your stop had to be outside of them. Guys, keep taking those pictures. Keep working on it. But if I have odds favorable momentum and I have a clear path, yeah. My stop, the only thing that makes sense is exactly what PFI said, where the market shouldn't go. Great trade, though. All right, let's do market replay, guys. Let's get to it. I'm going to close. I have to open my untitled. That was beautiful. The only thing, and it goes back to trust as well, the only challenge, and it wasn't even a challenge, your trade was absolutely amazing. The only challenge, and this will come with trust, is that if you had entered at the area, instead of being in at 42, you're in at 37, which gives you an additional 5 ticks of profit, which means that this 14-point tick trade is a 19-tick trade, but it also gives you 5 ticks less of risk. Does that make sense? So we're developing that trust to get in on the way down instead of waiting for it to go on the way up. That's how we reduce risk. I'm going to do 2 things here. First of all, I'm going to jump your ass a little bit. Stop that. Stop talking down to yourself. If I'm not allowed to hate you, you're not allowed to hate you, right? This shit compounds. This right here is so detrimental to traders. I promise that. So check it out. Ready? Market's coming down, market's coming down, market's coming down, market's coming down. This is your entry at the support inside of favorable large triggers. Are you with me? And that is at 36, we'll call it. Mid-band, right there, inside of favorable large triggers, 36. You're in at 42. So that's a 6-tick difference, right? So when I put my stop below that reversal bar, instead of having 3 ticks of risk, I have 9 ticks of risk. You didn't have a limit order waiting at the area inside of favorable large triggers. You entered when it was on its way up, right? That's okay. Rule number 3 says that I'm going to buy a pullback in an area inside of favorable large triggers. And it's going to seem fast in the beginning, PFI. And the more that you study this, you'll have this limit order waiting 5 minutes before it ever gets hit. But the way this happens is now you've increased your risk by 6 ticks, because when your stop is here, don't wait. Yeah, have the limit order waiting at the midband. So instead of your stop 3 ticks below, you're all the way up here. And instead of your profit target being from here to here, your profit target is now from here to here. And it sounded like my headphones shut down. Can you guys hear me? I'm panicking here. They're making noises in my ears. So yeah, that's why we do that. Cool. Let me get to awesome. So market replay, guys. Let's get this done. I am in a tunnel, Gary. It's the craziest thing ever. But yeah, PFI, you nailed it when you said it's a trust issue. That's all it is. All right, guys. On NinjaTrader 7, to do market replay, and let's give you, I'm going to teach you to fish, and I'm going to give you fish. But guys, me doing this once isn't going to be enough. So save this link. Go to the education page. Here's your instructions on how to do it with market replay. But on NinjaTrader 7, the first thing you have to do is you have to go, let's see, File, Utilities, Download Replay Data. File, Utilities, Download Replay Data. I'm going to click that, and it's going to ask me, what market do I want to download? Well, we'll just say crude oil, 923. What day do I want to download? I want to download today, Friday, August 4th, and I'm going to click OK. And it's going to download my replay data. You see it in the bottom right-hand corner here. As long as that message is there, it's downloading data. It'll take it just a couple minutes. It's taken everything from the day, guys. Okay, it went away. My data's downloaded. So now what I need to do is I have to disconnect from my live market, and I have to connect to my market replay. And when I do, there's a cute little ding, and I get my market replay thing. So on NinjaTrader 7, it's a little more of a pain in the butt. On NinjaTrader 7, I'm going to have to build the charts that I want to trade, which means that I have to build my large chart, and I have to build my small chart. So what I'm going to do, the first thing I'm going to do, forgive me, is I'm going to make sure on NinjaTrader 7 that my dates line up, that I'm on the 4th, I'm on the 4th. And I'm going to build a chart, and I have to go through all of this. Everything's in the instructions, guys. I'm going to build a 13-2 chart. It's going to go back 10 days. I'm going to put my template on it, and I'm going to click OK. And it's going to throw it on a different monitor. So guys, what it's doing is it's building that 13-2 chart. I have downloaded data. So I'm going to have to build both the 13-2 and the 5-1, right? Because that's how we trade. Big chart, little chart. And then once this is built, you're going to be able to use these buttons. You're going to be able to hit play. You're going to be able to hit stop. You're going to be able to hit pause and check your rules. And then when you take a lot of pictures, bring them to class. And then you're good, right? And now I can disconnect and I can call it a day. And that's how you're going to do it on 7, guys. And I'm telling you, it's all in the video. But that's how quickly the process happens when you do it 2 or 3 times. And then NinjaTrader 8, since the majority of you are on there, remember, this video
is going to walk you through that exact same process. Let me open up my NinjaTrader 8 real quick. Let me figure out where it is. It's hidden behind a bunch of stuff off on the sidelines. So give me just a second on NinjaTrader 8. Hide my password from you guys. Bunch of hoodlums. Guys, how'd we do this week? Ace J, you feeling a little closer? Levon, it's like drinking from a fire hose, man, but it gets better every day. New users, give me some feedback. Let me know what you need to see. It gets better every week, guys. Every week it gets easier and easier. Tell you what. Whoops, I put the wrong password in. Hold on just one second. And I'm cool if we run over, guys. I'm not worried about it if you won't. All right, my NinjaTrader 8's coming up. I'm going to show you new users something funny that's incredibly true. This is going to be your roller coaster with Nexgen, guys. You're going to get it. It looks like fun. You're excited. It's awesome. And then you go, oh my gosh, I've got to learn stuff to get rich, which is just crazy. Who does that, right? And most of you, right around 30 days, are going to decide that you're brilliant. Right around 30 days is when I decided that I was brilliant. And I opened a live account with like $7,000 in it and traded the S&P. And I was separated from all of my money on that very day. And this is where every one of you, you're going to go to try and do it before you're ready, before you've simulated, before you've participated, before you use your spreadsheet. And it's going to create challenges. And you're going to have to make a decision that if you really want to be successful, if you really want to move forward, that you're going to have to follow the path. And this is the I don't know shit stage. This is the, man, I thought I knew it, but now I don't. I'm a little dejected. I'm getting beat up. I feel a little sad. And you and I are going to talk, and you're going to realize that you're absolutely where you need to be. And this is what you needed to commit to the plan. And then we're going to work together until you get to I did it, guys. And that is the path. That $5,000, you don't have to do that anymore, guys. Prop firms keep you from doing that. You can lose $100,000 on simulator on a prop firm, and it can only cost you like $400 or $500, guys. It's amazing. So NinjaTrader 8, are you guys ready? First thing I have to do is I have to disconnect from my live. Gone. And I'm going to go to my connections, and I'm going to go to playback connection. And when I do my playback connection, we're doing market replay. So we're going to do crude oil. Actually, we'll come down here to the instrument. Get market replay data. We'll do the S&P, 923. And we'll do yesterday, 8.3. And I'm going to click download. And it's going to download it. All right, it's done downloading. So I'm going to click continue. See how easy this is? When I click continue, it gives me my playback. What do we do, the S&P? Guys, I'm going to make my dates line up. I'm going to do August 3rd to August 3rd. I'm going to do one day at a time. And I'm going to open up a crude workspace. You don't have to build the charts in 8. It'll just open up your workspace. And it's going to start right at that Thursday. And it's going to calculate, and it's going to look exactly like the live market, guys. And then once it does, the only thing that you need to do is trade your rules. So look at this. I have a termination that creates a full reversal that gives me odds favorable. It's still calculating. I have an area inside of favorable large triggers. I can speed it up a little bit. And once I click play, this market's going to start moving. Well, it should start moving. Oh, it's the middle of the night, so it's super slow. It's working through. Let me pause it. And you'll just trade it like it's live, guys. And if you think your rules are met, click pause. and go, man, do I have odds favorable? Do I have a clear path? Do I have no divergence? And if you do, simulate that bad boy, right? Get that market order in there. Make sure that you're good. And guys, that's how you do it. Both of the videos will walk you through it. Both of the videos will give you everything that you need to make that happen. I think it was still calculating on other spots. And then when you're done, you can just disconnect, right? You can close your workspace like normal. And if that's it for the day, be done for the day. Close it out. I'm done for the day, guys. I hit my profit targets before I ever started class today. So I'm going to enjoy Friday. I hope you do the same. I hope you enjoy your weekend. Once again, here's the link. Go through and practice it a few times. It might take you more than once to do it. If you do it right now after class and you have a challenge, you can always reach out to somebody to help you. It's been a great week, guys. It's been an exciting week. There's been a lot of money to be made this week. If you didn't make money this week, then we need to talk about it. I need to see your pictures. We need to get you to that point. The more pictures that you post, the quicker we can get you to where you want to be. So thank you, everybody, for being here. I hope you have an awesome weekend. I'm going to have an awesome weekend.